Yo, hello everyone. Welcome to another live stream. Let me see if I can improve my microphone a little bit. So let's see, automatically adjust. Let's try that. Because I've been watching the recordings and like the quality of the microphone does not seem to be the best as it is usually on my videos. So let me know if like the quality could be a bit better. And I'll look into it a bit more with adding sensitivity to the microphone. Good morning from Lakeland, Florida. Hello, welcome. Hope you're doing well in Florida. I really want to visit Florida. Like, it seems to be the coolest part of the States, if I'm being honest. Especially the area around, like, maybe not Miami, but around Miami. So I hope you're enjoying your time there. And where is the coffee and poop guy today? So usually we have the poop and scoop guy join the comment section, and he is missing today. Hopefully he does come back. Anyway, looking at the markets, let's see what we can see. CPI. Let's take a look. So if I make this a bit wider, if I go to the calendar, what do you mean CPI? Do you mean the PCE? I'm not exactly sure what you mean. We got the Aussie CPI. So for Australia, it came in a bit hotter than expected. So lower than the previous number, 3.8, but higher than the forecast, which ended up being a bit bullish for the Aussie dollar. See? So the Aussie dollar gained some value on that. My trade is doing well. So gonna keep on holding it for now. If we look at the historical data on the Edge Finder, and we go to, so we go to data, inflation, CPI. Let's take a look. AUD. Yeah, it's going lower and lower. So if you look at like the long-term data, it's kind of bearish on the Aussie because falling inflation means the central bank can be more dovish and keep interest rates lower. But I'm still bullish because the economy in Australia does seem to be doing well. So even though this is on a path lower, I'm still long on the Aussie. Plus, pretty much most economies here on the list, most currencies, the inflation is going lower. So you're trying to gauge the relative value of one currency to the other, right? Okay, just a second. I have these scammers calling me every day, every freaking day. Like, I think someone sold my information when I signed up for a broker or something. I think they sold my info, and now the investment scammers are calling me nonstop. Side note. But getting back to it, thoughts ahead on pre-release PCE. PCE PC price index. I think it's gonna be a non-event. I don't think it's gonna be that important. You're waiting for the CPI and the PPI. The PC, I don't think it's gonna mean much. So the next actual inflation print that I'm waiting for is gonna happen on the 10th of September and the 11th of September. We can take a look at the trend, I think, on the core PCE. Yeah, here it is. So for the US, it is rising a little bit. What's the forecast? Forecast is this is the month on month, from 0.1 to 0.2. So a bit high inflation on the PCE, which could be a bit bullish for the US dollar, although I think it doesn't really change the situation. Like, if you have been following my segments, you would know that I'm pretty much betting we don't get a rate hike this year at all. The market is pricing in hikes, 45% chance of one hike, 22% chance of two hikes. I'm saying that's not going to happen. I'm saying that no change should be at like 95%. So that's what I'm positioned for. That's why I'm short on the US dollar. That's my personal game plan there. Adam says, can I also call you, Marco? Please do not call me, but what you can do is you can send me a message on Discord. So if you're in the A1 Trading Discord, you can find my profile and feel free to send me a message and ask anything that you like. If you want to join the A1 Trading Discord, you can join for free. Okay, there's a QR code right there on the screen. There's a link in the description, and I'll post the link right now as well. So stream links, Discord. Let me copy that and let me paste it in the comment section. I was just trolling. I know, but you can still send me a message if you want. So CPE. What is PCE? You mean like the PC price index? I think you mean the core PC price index. And if we look into it a bit, so it measures the change in the price of goods and services purchased by consumers, excluding food and energy. So it's an important print, but not as much as the CPI and the PPI, because the Fed, I think, heavily relies on the CPI print. So I'm not closely watching the PC. I don't think it's going to be super important. I don't think it's going to be a major event. If it is, you can catch me again on my second segment, which is going to happen in 2 hours. So we can comment on the news. But I'm just thinking it's not going to move the markets much. You need something better. You need something with more weight. That could be the Jackson Hole Symposium, absolutely. But what I actually think is going to happen is the NFP is going to be a market mover. The PPI and the CPI will be big market movers, and then I think the Fed, whichever number comes out before that, like even with high inflation, I think the Fed turns out more dovish than people expect. I think the economic projections turn out more dovish as well. If we look at poly market and we look at US inflation, just to gauge what is happening there. So August inflation, let's see, the volume has climbed a little bit, I think. Now it's at 32K, so the signal is getting more reliable. And the most prominent number is 3.4%, so same number as before. Now, there's still a lot of days to go, so this can drastically change. But once this volume crosses 100K, it's going to be pretty good, okay? It's going to be a pretty good signal to see the actual print. I think Kalshi did a study. So as far as prediction markets go, you have poly market and you also have Kalshi, right? So for Kalshi, they did a study. I think like 80% of the outcomes end up being the correct ones. The 80% of the outcomes that are winning, for example, right now, 45% chance of 3.4%, and 80% of the time, this is correct. So it gives you a nice probability right there. It gives you a nice signal. With 3.4%, it's not a concern for the Fed. If the CPI comes out 3.4%, the Fed, I believe, is just going to be more dovish. The future projections will tell us that there will be probably no hikes this year, and the dollar can keep on losing value. Let's take a look at the dollar for today. It's up, actually, a little bit bullish, but not really moving much. Brent is really falling off. I don't know what is happening there. I don't know what is happening with Brent, but big sell-off there yesterday. Big red candle. I think it was explained as being something that had to do with basically the US Treasury and all of the banks being blocked that are currently, I guess, working with Iran or using or taking in their payments. I don't know. Anyway, I think it's because of some sanctions. Yeah, that could be an explanation. So, offered to Iran to hold the siege and lift sanctions under the Memorandum of Understanding. No, this is not it. I think it's something else I caught with Besant. So with the US Treasury, they are putting on more sanctions. They are sanctioning, as I mentioned, banks that process Iranian payments and stuff like that. So could that be the case for lower oil? I don't know. Let's also see the Hormuz traffic, portwatch.imf. What is the latest update? Okay, yes, we got a new update. Amazing. Love it. So the newest update is August 23rd. And guess what? The strait is still fully closed. You have maybe a couple of ships passing through, like 1 to 3. Trade volume, almost zero. Okay? Almost zero. I don't know what this line is. 7-day moving average? What? That's not accurate. Anyway, so yeah, this is not so great. That's why I'm asking, why is inflation down? Or sorry, why is oil down? Like the strait is still closed. What it looks like to me, it looks like, let me just see Ethereum as well. It looks like the oil crisis is not going to be as big of a crisis as people have been predicting, as all of the oil analysts have been predicting. Good morning from South Africa. Welcome. I also want to call you Marco. Oh, you're the sip and poop guy, right? So welcome back. Please, guys, don't call me because I have like 10 scam brokers call me every day and my phone is overloaded. So if you do want to reach me, you can find me on Discord and you can just send me a message. It's much better, much more efficient. Hi from Iran. Hello. US GDP to 2% today. I don't know. I'm expecting a $10 per ounce move on gold. Gold needs to come down to 4520. Hello. Please check US oil. What's your direction bias? Before Edgefinder was established, how did you macro scan? Economy is a mess right now. Nobody really knows what the hell is going on. Well, you do have a couple of people who do know kind of what's going on, who are placing bets and making money on those bets. So there are traders who are profitable in this environment. There's always got to be someone who figures things out. US oil. So for oil, I don't have a clear direction. Personally, here's what I think happens. The strait remains closed, at least until the end of this year. US and Iran don't reach any sort of a deal. We just go back and forth as we have been going ever since March. Oil stays elevated inside of this range. So above 85, below 110, let's say. This is the range for Brent. Brent is the best indicator for the Middle East conflict. So, come on. So I think this happens. See, just elevated prices staying inside of the range. If they manage to build the alternative pipelines in time, if they manage to open up new routes, I think through the other strait, the Bab El something strait, then that can alleviate more pressure from the Hormuz strait and increase the supply. For now, it doesn't seem like a big deal. You do have winter coming up, and Europe is a huge importer of energy, so that'll be interesting to see how Europe will handle heating and essentially the potential oil crisis. So I'm looking to sell the euro going into that. Only 10 scam brokers. Yeah, and I keep blocking the numbers, but they just change the number immediately. So they have a really good system. If they apply themselves to something constructive, they would probably make a lot of money. So I don't know why scam. You know, you can just apply that same effort. I guess they enjoy it. Max, hello, welcome. What about gold? Will gold go up or down? Gold will go up. Hey, Marco, what do you think about Forex today? Thank you. I think the main story, the best story that you can actually trade is selling the US dollar. So that's the main story, main thing that I'm looking to do in the next couple of weeks. With the repricing for the Fed. So for the Fed, you have hikes priced in, right? People are still expecting hikes. I don't think that's going to happen. you will get a dovish repricing. So a dovish repricing is actually bearish for the dollar. Some good currencies would probably be the Aussie dollar. You can also sell USD CAD as well, right? That's not a bad take. The CAD is improving actually. The Canadian dollar is improving a bit. You can sell if you want to go exotic USD FXN. I don't know. You can do that. I wouldn't do euro dollar. So personally, I would not buy the euro dollar because of the upcoming potential energy crisis. Winter is coming up, heating. So if energy is elevated, if Brent is up, it's going to take more euros to convert to dollars to buy oil, to buy energy. So your euros will get devalued, right? The euro should kind of even maybe lose value against the dollar. I'm thinking it loses value against some other stronger currencies, like the yen, as an example. So I'm betting that the yen is a bit of a stronger currency in the next few weeks. Let me see Swiss yen. Swiss yen, I took profit on my short if you're interested. So plus 1.64%. I'm going to hide it now because that trade is done. Swiss yen is going lower. So is the Swiss? The Swiss seems to be losing value again. So you had a massive drop there and now it's recovering pretty quickly. Okay, interesting. And my Swiss yen is going back lower. Okay. So as far as Forex goes, the main theme, the teams are a bit slow at the moment. There's not much you can do. Like the markets are sleepy. It's August. You're waiting for the people to essentially come back from vacation and come back into the office and start putting on positions going into the year's end. So it's kind of tough to get a team at the moment, but I think selling the dollar is a good one. I think that is a good one. I want to check Financial Juice to see for the breaking news. So I focus on the stuff that is in red. If I miss something, just let me know in the comments. But I don't think much is happening. So what the Aussie went up a lot. I think that is because of the inflation news, and the yen looks like the yen lost value as far as I can see here. Yeah. But that was this morning. Okay. So this is the Australia CPI news. The inflation came in a bit higher than the forecast. ECB policymakers have little appetite to signal further tightening. Policymakers are ready to raise rates in September to stem side effects from the Iranian war. Okay, that is interesting. That's hawkish. It's hawkish for the euro. And the reaction was not much. You also need to distinguish between actual news and just rumors. If there's no source and if it sounds a bit fishy, it's probably fake and it's just rumors. Proposed framework between Oman and Iran includes the establishment of a joint temporary shipping lane. Okay, it doesn't really impact us much. Canada puts 15 to 50% tariffs on $20 billion of US products. Interesting. Okay, so you're getting some retaliation tariffs, I think that's the name. Iran has been notified that any ship or boat placing new mines will be immediately destroyed. All mines have been removed. No talks or discussions. Not much. The US may return diplomat to Middle East as soon as this week. I think, yeah, we commented on this yesterday. So what I like to do during these opening streams, I like to go through the breaking news to see if there's anything worth trading or anything that's actually going to change the market positioning or the price. There's not much. Hello, Tony. Yen is strengthening today compared to CAD and Swiss. If I look at the JXY, it's actually down. So the JXY is down. if you look at CAD yen, I mean, even Euro yen is a little bit down. CAD yen is down. Swiss yen very much down on the day. RBA might go ahead with a hike now, as discussed. Maybe. Let's see the pricing. So if I go to rate probability, and just give me 1 second. Okay. Rate probability. Next meeting, 77% chance of a hike. When is the next meeting? September 17th. Okay. So this is the BOJ. My mistake. RBA. 43% chance of a hike. The curve is to the upside, so the market is expecting some hikes. September 29th, that's like more than a month ahead. Personally, I wouldn't want to trade that event now. I am long on the Aussie, but I'm not really counting on a hike on the next meeting. I'm just probably going to be in the trade for like the beginning of September. I just need the repricing to change here. So I'm mainly betting on this to change. For this to become like 90% and for this to go to almost 0, which should make the Aussie dollar go up, right? So I don't really care much that we get a hike or don't get a hike on September 29th. It would help if we get some horror inflation prints as we got this morning, let's say, or what was the time there? So let's take a look. It was 3:30 my time, so it was during the night basically. I think USD pairs are set for a pullback, at least in the short term. We'll see. It's funny how no one is paying attention to the fact that if central banks around the world are hawkish, for the same reason, Fed cannot remain dovish. I'm expecting a surprise. Do you mean a hawkish surprise for the Fed? Most central banks are following the Fed. So if the Fed turns dovish, like the markets right now, they're pricing in a hawkish Fed. They are pricing in rate hikes. So you could expect most other central banks to be hawkish as well. But when the Fed flips to dovish or stays neutral, well, you can expect the other central banks to copy the states. It's not a rule, but it happens most of the time. What are your settings on Financial Juice? I don't get any red dot news. I don't know. I didn't mess with it much. Let's go back to breaking news. I didn't mess with the settings much, so it should be in the red for you as well. Like the latest one should be the Australian CPI. If something is off, it's worth resetting your feed. And this is not the paid version. This is the free version with the delay. Thank you. That was very informative. No worries. Golden BTC, my favorite Markov. Thank you, Josh. How does DarwinX work? DarwinX, I'm not going to go into it too much now, but if you want to learn more about it, just look at my YouTube channel. So my YouTube channel is Marcos Trading Journey. I have dedicated videos for DarwinX there, and I explain everything in the videos. So if you're interested, take a look at the channel. I didn't close 50% on AU, and my final is 0.71988. Do you think that's possible? That's your target? 19988. I think it is. I think it is. So I'm positioned with a trailing stop loss. I haven't taken profit on the full position yet. So for me, I'm thinking we go up more. I'm thinking we appreciate. Now, do we pull back before that? Maybe. Do we hit the 20 MA? We could hit that. That could happen. So be prepared for that. You need to do what you think is the right move. But what I can tell you that my plan is, I'm trailing the stop loss, and I'm thinking more upside is possible. What will be the gold move, up or down? Up. The whole point, Marco, is the clear hawkishness in RBA. Yeah, I think on the last meeting you had like 4 dissenters voting for a hike. So that's interesting. I guess they're actually sticking to the inflation target, which the US is not. The inflation target is always 2%. For most central banks, they want to bring inflation at 2%. The only one that kind of says that they want 2% but doesn't act on it much is the Fed. So for the Fed, 3% is probably the new 2%. I'm thinking the Fed is pretty happy with 3.5, 3.4%. But for Australia, I'm guessing that in Australia, they're seeing 3.5 and they're saying, no, it needs to go lower. It needs to go near 2%. Why do you guys want to predict the move? Why you can't just react and follow? Maybe I should unclick some boxes. Try it. Just reset to default settings. Gold, please. Marco, how will you use your stock box to find new trade ideas? I can explain that a bit. What do you think today's news outcome will be? Not much. I don't think it's going to be a big market mover. So stock box, let's talk about it. Now, basically for my stock picking, I need the first condition I need is the SPY needs to be in a clear uptrend. So the SPY needs to be above the 50, 20, and the 10 EMA. Well, right now it's not. So I'm not looking for new positions on stocks. This would be a good market condition. This would be a good market condition. And this would be bad. This would be bad. Okay. So first thing, the SPY needs to be above the EMAs, preferably near all-time highs and on a clear uptrend. Second thing, you look at the stock box, you look at the top sectors. You see the best ones. Basic materials, oil and gas, gold miners. Pretty high score there. You then try to pick the winners out of these sectors. Example, oil and gas was hot, I think 1 or 2 weeks ago. So I looked at VLO and it's working out quite nicely. So VLO is performing quite well in some decent profit. VLO is Valero Energy Corporation. Essentially, the SPY needs to be in an uptrend. You look at the top sectors, you try and identify the best winners out of the top sectors, and then you assemble a list. You assemble a list of stocks that are setting up for a breakout. So on CDNA, this is an example. This is what you want to see, or what I want to see. A pole and a flag, or a base. And then a breakout out of the formation. You buy the breakout. Now, I didn't take this because, remember, the SPY right now is between the EMAs, so it's not according to plan. But that's basically it. That's the strategy. You buy breakouts. And sometimes, if I'm not really certain about the specific breakout, what I do is I go to top stocks. I find the stock. For example, let's go to AMD. And if AMD is bullish, which right now it is, then it's another added confluence for me to take a position. So that's how it works. I mainly use the top sectors. And then if I want an extra confluence, I go to top stocks to find an extra confluence. Also, earnings calendar is pretty important right there. And things like the financial summary, earnings report tracker. So you can use all of that as an extra confluence. Same thing, basically, earnings is pretty important as an extra catalyst. So anything that you can use as an extra confluence is in the stock box. If you want to get the stock box, the link is in the description. You can get 15% off with code Marco. And yeah, definitely take a look. Buy the stock box if you're interested. It is a massive, massive confluence for your stock picking. I have ran out of time. You have James coming on in 30 seconds. I wish you good luck, and you can catch me again in 2 hours. So I'll play a quick transition, and then you will have James. So let's find the transition. Okay. Thank you, and see you in the next one.
If you're looking to get funded and want to save big on prop firms, check out our website, A1Trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size, and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello, hello. Can you guys hear me okay? How's the audio? Let me just check. I think it should be on the right one. You should be able to hear me all loud and clear. Happy Wednesday, ladies and gentlemen. It's good to be here. Hope everyone's well. Okay. What's going on here? Let me just make sure I'm all caught up with the chat. I think Marco probably covered everything. Loud and clear. Good stuff. Okay. Yeah, I think yesterday I was using the wrong mic again, but as long as we're good today. Tell me about gold. Christoph, good to see you. Christian, hello, hello. Okay. So, just bear with me for a second. Right. Okay, so gold. What's going on with gold? Let's take a quick look at gold. So it seems we are having a little bit of a turn to the downside today, but I would say that's actually quite a good thing. I would say the problem gold's had really is that it's been parabolic. You know, this is an amazing move if you're already in positions, but if you're not and you're sat on the sidelines, this is one of the worst things you could see because, you know, I'm sure almost everyone in this chat uses the Edge Finder, and if you don't, you probably should. But again, I'm going to assume most of us do. And most of us follow it, you know, pretty rigidly in terms of if something's bullish, we're going to look to buy. If something's bearish, we look to sell. Now, gold has been bullish for quite some time now. And it had such a beautiful move in terms of its score history. So this is something I like to pay attention to quite a lot, actually, is the way that the score develops. So if something has gone from being what was very bearish down here with -14, it then slowly climbs to the upside back to neutral and then slowly climbs into bullish. It's a very consistent, reliable score. And this is just the way I view it. But if something goes from, you know, let's say down here, let's say -6, and then pops up to like a +2, that doesn't really mean much. You know, it's a very quick move and the score's still not that significant. So something like this is fantastic. But my point is, if you use the Edge Finder, I'm sure you've been seeing this gold reading, which is bullish. Now, again, if you weren't already in this position, you just sat on the sidelines with this bullish fundamental score, and there's not much we can do. So I do think the downside is probably what most of us want to see at this point, myself included. Now, I'm in these three positions, but as I've been saying, they're very, very small. So they're not as impressive as they actually look like. But in terms of shorter term trades, basically all I'm looking to do is draw the fib from the low to the high, which in this case is obviously this low to the most recent high, a pullback into one of these fib zones, whether it's the 50% or the 61.8%, either one. And then I would be looking for a rejection off of this zone and a continuation higher. The downside is there's not really any structure on this left side. So what I would actually imagine, and this is very sort of pedantic, but something I'm paying attention to, is actually a slight break below the fib zone, retesting these highs, and then a closure back up either into the fib zone or back above. And then that would sort of confirm a break and retest type pattern. So that's what I'm looking for. What we've also got, I made a YouTube video on this yesterday, but it's really, really good, which is this golden cross that we've had on the daily chart for gold. Now, the reason that's significant is because when daily moving averages, specifically the 200 and the 50, when they cross, it can be quite a big sign of a trend change. So when we had the death cross or the golden cross over here on gold, this was a big warning sign for a lot of bulls. It was a case of, okay, the daily trend has now actually flipped for the first time in many years. So keep in mind, we've had no moving average crossover during this whole period of gold's rally, and then we finally had it. So it was a case of, okay, the geopolitical landscape was bearish, obviously, with the Strait of Hormuz and Iran situation. We actually also had the Fed and other central banks that were looking like they were being more hawkish as well. So this whole environment was really bad for gold. Now it seems like we're, again, having this golden cross back to the upside. We're having that trend change on the daily. The US dollar is extremely weak at the moment. So I think realistically, we've gone from a point where everything looked really detrimental for gold into a position now where actually things are looking really optimistic. Again, we've got not just the trend and the technicals, but also the fundamentals on the edge finder. So I don't really think there's much else to do on gold other than look to be a buyer at some point. Now, of course, however you do that is down to your strategy. This is what I'm doing first of all. So the positions I've got open on gold are very, very small, as I said earlier. And they were initially meant to be sort of, well, they are DCA positions, but the initial idea was actually that gold was going to go lower towards 3,500. So I actually had pending orders every $100 increment lower than 4,000. So 3,900, 3,800, 3,700, and so on. So that's why these positions are small. Now, this didn't obviously happen. We did reject this weekly level of support and the 4,000 level, and now continue into the upside. So I'm now in 3 positions that are going well, yes, but the actual P&L or the size of them is pretty minor, really, considering the move that I'm involved with here. So I'd love to get into a shorter term position, something like this, have a little bit more risk on this trade. When I say more risk, I don't mean oversizing. I mean a little bit more risk compared or relative to the other positions. This will be likely just a standard sort of 1% or maybe even 0.5% risk trade, just to again increase the size and double down a little bit on my bet that gold is bullish. So that's my view. Again, I don't really see any other option at the moment other than to be a buyer of gold. I could see an argument maybe to be a short-term seller based on sort of a technical basis. That's not the way I trade. It's not something I would do. But again, I would say short-term, maybe a little bit of a short play on maybe a scalp or a day trade idea. But longer-term, sort of, you know, for the rest of this week into next week and further, I do think being a buyer of gold is absolutely the way to be. Not financial advice, of course. My prediction on Eurodollar is actually a very interesting one. So I find it very difficult at the moment to really pick a side because I'm trapped in 2 ways. So there is the longer term James that is actually quite bearish, and then there is the it's a bit cringe to speak in third person, but the current version of me that actually can't justify being short. So I'm going to take sort of 2 sides of this. So you did ask for longer term, but I'm going to explain both. So short term, I do sit bullish because that's where the fundamentals are. I'm a fundamental trader. It makes sense. So we've got the edge finder that's bullish. We've got a really nice technical setup here from the daily low to the daily high. The 50% retracement here lines up with the previous structure on the left. So this will be a really clean break, retest into the 50% retracement, and then a continuation higher pattern. This is the way I trade. Very simple. So I really like this idea. Maybe back towards 1.2. Very, very simple and straightforward. But there is then the longer term side of me that just loves to short Eurodollar. It's a little bit of an addiction, actually. I really like going short. Now, the reason I actually like going short is because of the swaps. You know, you get paid to sit short, and Eurodollar is quite a mean reverting market, generally speaking. Of course, you do get massive rallies and things, but again, sort of on an intraday basis, it can have quite nice mean reversions when it gets extended. Anyway, what I'm actually talking about here is this weekly and monthly pattern that we see within Eurodollar that just repeats. You know, this has been going on since sort of the end of or mid 2018. So we come up, we create a high here. Then we create a lower high. We've got another lower high. We've got a lower high here and then another lower high here. So we are clearly on this sort of monthly overall bearish trend. But it seems to be a pattern where we come up, we create these lower highs, and then we have some sort of sell-off. Now we can have these periods in between where we actually just seem to mess around a little bit, a bit of consolidation or double top, whatever it may be. So I'm looking maybe for another short if we can come back into, let's say, 1.18 to 1.1, to 1.18 to 1.2. I wouldn't mind maybe building up a little bit of a short position just to see if we can continue lower. Now, this is also backed up by the seasonality on euro dollar. So I'm not sure actually if this has been fixed yet. It was a little bit buggy earlier. I tried to show the euro dollar, but it didn't work. So all the others worked, by the way. But for some reason, euro dollar didn't. Let's just see if it does now. Just let it load. There we go. So euro dollar historically is very bearish really into sort of the end of the year. Now, excuse me. Now, this is the 10-year, but I've also been paying attention to the 5 and the 15-year, which are also very bearish, but obviously slightly different timings on when they actually occur. So I'm looking really for a sort of historical play on euro dollar to the short side in the long term. But again, short term, I am looking for a little bit of a long position off of the previous structure here and to continue higher. So one way I could do this, I know I'm yapping a little bit here, but I'm sort of thinking as I'm talking to you, one way I could actually do this is if I could get into a long position like this, let's say, whilst this trade's running with, I don't know, let's say 1% risk, very standard, and it's running into profit, I could begin to build up long-term short positions with very low risk. And that way, if these trades actually don't work out, then I've got this trade to cover the loss and maybe profit, depending on exactly how I position them and the size I take. So I think there is a really good approach here on euro dollar. It's a little bit complicated because it would involve actually hedging the long side with a bit of a short side as well at a certain point. Hopefully that answers your question. I know it's a little bit long-winded, but yeah. So to clarify, short term, I am bullish. Longer term, I do sit more on the bearish side. I think actually also something I need to clarify there. To be on the short side, I need a catalyst. We spoke about catalyst yesterday, which is when you essentially wait for something to validate your idea. So on Eurodollar, this is actually a perfect example. I do sit on the short side long term because of seasonality and sort of monthly and weekly pattern we see. That's not enough for me to actually do anything with. So in this case, the catalyst I would be waiting for is, I don't know. It could be anything. It could be something like the Fed turning surprisingly more hawkish, or the ECB flipping dovish, or some sort of data print or a geopolitical event, something to actually trigger the market to turn bearish. Does that make sense? So that's another way to look at it, and that is kind of what I'm waiting for. So short term, again, keeping it super simple, just looking to be a buyer. Eurodollar, excuse me. Okay, let's not do that again. Sound like a acne riddled teenager then. Eurodollar is pulling back nicely for some buys. It is. I just need to see a little bit more of a move lower. So I've got the fib on the daily down here, but I'm actually looking to execute on the H4. This is normally where I take my positions. So I need to see it come down to roughly 1.162. Then I can be a buyer off this 50% retracement. And again, it would line up with this previous structure. We've got the H4 trend that's bullish. So yes, it's looking great. But again, I can't really do anything until we have this little move to the downside because it's just too high for me to buy. There's no, my strategy doesn't tell me to be a buyer at this time. Yo, mate, just came across your stream and dropped a follow. I respect the hustle. I know hold on, I've been baited into a scam here. Yeah, I am. Okay, ignore that. Someone on Twitch. Hi, James. Could we have a look at Pound Swiss? Yes, we can have a look at Pound Swiss. I know Pound Swiss was a bit of a hot topic on the stream for a little while. I was very cautious about it, but let's see what's going on at the minute. So it seems like it's dropped off. We don't have a Pound Swiss reading, but we do still see the pound is overall quite strong here. So we've got Pound Dollar, Pound New Zealand, Pound Yen, Pound Aussie, Pound CAD. So being short the pound, generally speaking, I don't think is that appealing. However, obviously it's about relative strength, not overall strength against or of the other currencies in this case. Okay, so what do we have here? I'll be honest. not too long ago, we were very bullish. Again, the Edge Finder was bullish on pound Swiss. It was a super simple trade. We had the daily establish a bullish trend here. We had the H4 that was bullish. It looked great. And we were looking at quite a nice setup that just never actually came into fruition. So we were looking actually at something like this. I think it was, if I remember correctly, was it like this? It was something along these lines. So I wanted to see the pullback into the previous daily highs, 50% retracement, and a continuation higher, which hasn't happened. Now, something that I've been talking about is the higher timeframes on a lot of the Swiss pairs, and pound Swiss is a good example. But you can look at this on, excuse me, things like dollar Swiss, New Zealand Swiss, Euro Swiss, pretty much all the Swiss pairs follow this same behavior. So they have these really nice bullish runs, you know, very aggressive, very quick type of bullish runs. But then we seem to continuously fail to break above and hold above this 200. So if we do break, we end up coming back lower very quickly. Same thing here, very brief wick breaks to the upside, then another reversion lower. Same thing here, reversion back lower. Same thing here, we held above a little bit longer, but eventually we continued lower. You can see the same things here. So with pound Swiss, I actually would rather follow this downtrend on the higher timeframes on the monthly and the weekly, and keep it super simple. So this is the way I'm actually looking at it. So if some of you remember when we were looking at the long positions on pound Swiss, my idea was actually to get into the long position down here and take profits and cut the trade up here around this 200 weekly moving average, because historically that is where price begins to reverse. So now the Edge Finder has actually dropped off on this, I wouldn't mind taking a short position. So again, the fundamentals don't support it, and I am a fundamental trader, so it's not a super high quality trade, and it's not something I'm looking to do right now, but this is just more me talking about the idea rather than actually saying I'm taking the trade. So something like this, stop loss probably not up here, that's a little bit wide, and obviously if we do end up coming up here, then the idea is broken, or the idea is no longer valid of this 200 moving average. So I'd like to reduce the stop slightly to maybe something like this, just above this previous high, allow the 200 some room, and allow for the possibility of a slight break above and reversion lower. Okay. So that's kind of it. That's really all I've got on pound Swiss. I do really like it, but as I said, the Edge Finder doesn't have a bearish reading yet, so this might be a case of just having to wait. So as you can see, it's actually still getting a score of +2. So that's one thing. Now, last thing I'll say about this before I check the chat again is the swaps. Is it macro scanner? It's carry trade scanner here. So pound Swiss swaps are brutal to the short side. So if you're buying, you get paid quite nicely. Obviously, the Swiss National Bank interest rate is 0 and the Bank of England is 3.75. So obviously, buyers get paid, whereas short sellers have to pay. We pay that 3.75%. So being short is expensive. So if this trade didn't work out, so let's say hypothetically we entered it here and it ended up coming above and range bound a little bit, this wouldn't even be worth holding, because this whole time it's not just drawdown, that, you know, that's just a part of trading, but it's also the fact you're actually losing money. Money has been taken out of your account to pay for that trade. Does that make sense? So pound Swiss short is a market you do actually have to be quite accurate in. Again, if you're trading larger size, the swaps can be quite meaningful. If you're on a $500 account, it's not that much of a problem. But, you know, again, it's something to account for, and it's something very important to understand is the swaps in the FX markets and fees. Anyway, let's see what's going on here. Hello, James. Do you do anything alongside trading? Yeah, I do actually. I'll show you soon. It's not quite ready, but I've got another company that I'm building. It's in events, so it's completely outside of trading. But yeah, I'd love to talk. I would really love to sit here and tell you about it, but I can't right now because I've got a co-founder and obviously privacy and NDA and stuff. But yeah, I'm getting into the events industry and stuff like that. So that's something I'm building on the side. It's one of the reasons I was in London, actually. Anyway, moving on. Do you wait for any confirmation or do you set an order? Okay, so that's a really good question, actually, and it's a little mix between both. It really depends. So it depends on two factors, really. First of all, how confident am I in the trade, and also am I at the charts? I'm pretty much at the charts, you know, 14, 15 hours a day. So normally I can get into a trade if it's there. So let's take gold, for example. I think you said gold as an example. Hold on, let me just make sure our timeframes are right here. So 4 hour here. Okay, so with gold, would I want to enter on this 50% retracement with a pending order? The answer is no. And the reason the answer is no is because I'm not desperate to get into this trade. So I've already got 3 positions on. The edge finder's bullish. But the reason I wouldn't want to get in here is because, as what I said earlier, I actually think this could come a little bit lower than the fib and retest these previous highs. So I think I could get a better entry. So I'd rather wait for a retest of these highs and a bullish candle close off of them, then get in and wait for that confirmation to play out. However, if it was a slightly higher time frame and the technicals were more aligned, so let's say this was also when I was looking at before we obviously had the move to the upside here on gold. So actually, I'll tell you what, let me just get a fresh gold chart so I can actually show you it properly. Let's get rid of, there's no drawings here. Okay. So in this case, I drew the fib from this low to this high. And let's just go on replay mode just so I can, again, show you it in a bit more clarity. So in this case, yes, I would set a pending order at this 61.8. And the reason I would do that is because I was at the time confident in gold, hence why I was buying it at that time. But also this does line up with the previous structure on the left. So if price came in here, this is a point where I would be very confident that we could continue higher. You know, I'd be willing to put the money on that idea that gold is bullish from that point onwards. So hopefully that answers your question. Again, it really comes down to how confident am I and how much time do I have to actually sit on the charts and watch that or pay attention to that trade. Gold does a liquidity sweep after 6. After 6 to 4580. Hold on. Let me just mark up that level that you've mentioned. So 4580 to 45. Let's just say 4585. Okay, so you think, I kind of get what you're saying. I mean, terminology doesn't matter here, so I'm not going to sit here and lecture on that. But I agree gold could come lower, but I actually think this is a bit too conservative. I think this is a too lower point for gold to come. If we are going to see a pullback on gold, I really would expect it to come slightly deeper. And the only reason for that is just because it's so extended. Now, it's not me saying gold's going to reverse. You know, I'm still, as I said, very bullish on gold. But I do think that gold is in a position now where it has the opportunity. You know, we've had the moving average cross. Likely or often when we have moving averages cross like this, we do see a bit of a larger retracement into the EMAs and then a continuation higher. This doesn't happen every time. Don't take that for gospel, but it is something that I have noticed throughout my years of trading with moving averages. So I would at least expect a retracement back into the wicks of this this sort of consolidation we had over here, and then maybe a continuation higher. But I'll be honest, I think gold is probably one of the easier markets to trade at the moment. I think it's really just a case of waiting and just looking to buy on pullbacks or whatever your strategy says. I think Marco said it great yesterday. Basically, it's shorting the dollar. That's kind of the base case right now until something really changes. So when we talk about the dollar, I wouldn't really be interested in shorting it right now. I think that, actually, let me go down lower time frame just so I can show you. I would say the dollar very likely will come back to revisit towards 99.5 just because we had the break of the previous support. We could come back up for the retest and then a continuation lower again. I think that's, again, based on just technicals, that's my base case. So if you are looking to be a buyer of gold or euro dollar, whatever it may be, I would have an alert or at least be paying attention to the DXY and looking at this level, because I think this could be the point where the dollar slows down on its upside and actually reverts possibly and continues lower. I keep meaning to record the streams I do because, to be honest, what I do is I sit here. Oh, sorry, no. I sit here from like 7 a.m., go over the markets, and then I'll look to make a YouTube video on something, and then I come on and talk for an hour, basically about the same thing. So I think Nick's got it right. I was watching one of Nick's videos yesterday, and I clocked that actually quite a lot of his YouTube content is like stream stuff. And I think it's probably the way to go. I think I've been missing a trick there. I'm just wasting time trying to do both. So I need to get in the habit of recording these streams. Anyway, let's see. Flash Solver, hello. Hope you're doing well. Jam Ayo. I'm not going to say your name because I don't want to butcher it. I do apologize. I'm not trying to be rude, but good morning to you as well. Morning. I paid. Can I get access to my Edge Finder? Yeah, I'm sure someone will be with you very soon. So just to give you a bit of understanding there, the A1 guys are really, really on it. That fantastic, fantastic level of support there. But as far as I'm aware, could be wrong, they are just in a base in America. They don't have like a global support system. So you should get it within, I would say, the next hour, maybe 2 hours, when they obviously get into their office in America. So bear with them. They are human. That's one of the good things, actually. There's no AI slot bot telling you to, check your email and stuff. So upside and downside of having human support is obviously there is a time constraint there. But do not fear. You will get it. I can guarantee it. Could you check dollar CAD? Yeah, we can take a look at dollar CAD for sure. Also, guess what I got yesterday? I feel like, when you're a child and you get a new gadget, or actually the guys might understand, I'm not trying to exclude the girls, but the guys will probably understand this when you get a new little bit of tech or a little hobby or whatever it may be. I got the stock box. So I got the stock box yesterday. I got access to it. And I found a trade. I'll show you it later, but I think it's quite an interesting one that could probably play out. But again, I'll show you that soon. Thank you for explaining. No problem. Okay, so we'll move on to dollar CAD in a second. Let me just catch you with the chat. Hey James, so far personally, how many positions can you get in with one currency pair before feeling overexposed? Okay, I'll answer that very, very quickly because it's not just one answer. I've said this before and I'll say it again. It comes down to budgets. So again, I'll keep this super quick and I will get back to the charts, I promise. But when it comes to exposure, you've got to think about it in a bit more of a high level view. When I say high level, I don't mean advanced. I mean high level in terms of a bit more broad of your portfolio, not just the trade. So I think in two buckets. So you've got theme, let's just say theme risk. So let's say you are trading based on dollar week. So this could be, Fed pivot, for example. Again, this is purely example. Don't take this as actual fundamental data at the moment. Fed pivot and week data. Okay, so we've got a theme there. We want to be, potentially short in the dollar. Maybe we've got another theme though. This theme could be, I don't know, let's say AUD strong for whatever reason it may be. Again, purely example's sake. So these themes, we want to say, okay, you cannot realistically say the dollar's weak, I'm just going to keep going short the dollar. I'm just going to give it infinite possibilities, infinite chances. So we need to assign a risk to the theme. So the way I do this is I will say, okay, I'm really confident in this theme of the dollar weakness. So let's say I'd actually be happy to risk 5% total, not in one trade. That's the total risk for the theme. Then for, let's say, Australian dollar strength, I like it, but it's not, I don't think it's the best theme. I prefer the dollar one. So maybe I'll assign this one 2%. So this then, actually, let me just move this down. This then relates into the currency or the asset risk. And again, other people might have different ways of doing it. This is just the way I do it. So asset risk. So based on theme one, which is the dollar weakness, what could we do? Well, we could go short dollar CAD, for example. So this will put me -1 on the dollar and +1 on the Canadian dollar. Trade two could be, let's say, EUR USD long. So this could be, this would be -1 on the euro, +1 on the dollar. So you see a +1 on the dollar because actually, sorry, hold on. I just realized we're actually going the wrong way there. Let me just do this -1, -1, and this will be +1, +1. Wait, is that right? No, -1 and +1. Sorry, I'm trying to talk and think and getting confused here. So we are -1 on the dollar here because we're selling it. We are -1 on the dollar here because we're selling it against the euro. Does that make sense? I know, again, I kind of butchered that. Hopefully you still understand where I'm going here though. So this is the current asset risk for this theme. So out of this 5%, I've got 2% risk. So I have the budget now for 3 more attempts. So if these 2 trades don't work out, I could take another 3 attempts, down the line. Does this make sense? Again, I'm not trying to make this super complicated. It is a very simple thing, but maybe I'm, trying to explain it, coherently. So this is the way I manage risk. I've got the theme, and then I'll break the theme down into actually how do I trade that theme and how much risk do I want on it. So again, dollar weakness is the theme. So I'm going to express that theme with the 5% max budget and say, okay, I'm going to go short dollar CAD. I'm going to go long euro dollar. So then I've used 2% of the 5% budget. Does that make sense? Okay, so again, I can cover that again in a lot more detail if anyone wants, but that's the sort of summary idea of it. A psychological question: should a trade? I will get again. I will get back to the charts. I promise. We do still have half an hour, so don't worry. I will get to everything. A psychological question: should a trader have a monthly target? Yes and no. I would say you can trade with targets as long as they're realistic. So I would say having maybe not a target, maybe limits, for example. So let's say let's say on average you can make 2% a month. Again, examples purposes. So then you could have a target of, let's say, 4% a month. If that 4% is met, you're done for the month, and that way you just stay safe. You've locked in your profits and you're done until the next month. You don't need to think or do anything. So that's one way you could use a target. I would never say have a target of 2% and you have to get 2% every month. That is how you end up blowing up. That's a recipe for disaster. But having limits is a different psychological approach. It's okay, I've done exceedingly better than I normally do on average. Maybe I've doubled what I would do. Again, if you normally average 2%, you made 4%, you've doubled up. So you could stop trading at that point. And you maybe even could take the next month off because, again, you've doubled up. So that's one way to do it. But then you've also got the downside limits of, okay, I've just hit negative 3% for the month. Okay, I'm going to just take the rest of the month off because I'm not getting anything that's working out. So you can approach it like that. But again, I would never have a hard target of I have to make 2 or 3% this month or 5% this month. That, in my experience, I've tried it. It's absolutely detrimental for your approaches, because what you'll do is you'll sit there with this mental benchmark of I have to make 3% or I failed. And then you'll reach maybe 2%. It's like, I've only got 1 more percent to make. And then you might do a stupid decision. You might over risk on a position just trying to make that 1%. And then you'll actually lose that trade. And then you've got to make back another 2%. And then you end up in this really nasty cycle of, oh, I was so close, I could have just stopped. But then you carry on to try and make it back. And it just, again, endless loop of nonsense. When are we going to organize an A1 and elite event? I would love to, actually. I think I was actually meant to see the A1 guys last year. I flew to Miami to take care of some business. I was going to fly over and see them, but I just ran out of time. I just couldn't make it. But yeah, I would love to go to their offices and do, we could do a content or some sort of meetup or something. Okay, let's get back on track. So dollar CAD, right, we'll do dollar CAD and then I'll get back to the chat because again, I don't want to spend too long yapping and then not actually cover anything important. Right, so let's start again. Where are we with dollar CAD? It was bearish or very bearish. Is it still there? So dollar CAD is very bearish with a score of -9. So we know we want to be short. We know the dollar's weak. As I said earlier, I am watching the DXY for around 99-ish or 99.5, just to see if we can get this retest of this level and continuation lower. However, what I would want to see on dollar CAD, how would I want to trade this? So I think it's pretty much what we spoke about yesterday. So we take the daily high to the daily low, and what we can see is the 50% retracement lines up with the previous structure on the left. Now, something I did note here yesterday that for me is quite important for the way I trade is this isn't a true break and retest anymore. And the reason is because, yes, this was used over here, but what we've seen since then is we broke above and actually broke below with no respect to this level. So it's not really that important anymore, but it is something I will use. I'm happy to still look at this point and line it up with the 50. So again, fit from the high to the low on this daily time frame, pull back. I'd want to see the pullback, into this 50% retracement, maybe even retesting this 200 moving average, and then a continuation lower with some sort of bearish engulfing candle from this point. So that's kind of all I've got. I think dollar CAD and dollar Swiss are very simple in terms of really just looking to sell the pullback. So yeah, there's that. And then actually I'm in dollar Swiss. I took it yesterday. It's not looking great right now, but the trade is still valid for now anyway. So again, dollar Swiss is very bearish here on the edge finder. It's actually got the lowest score, -11, so that's great. And exactly, well, pretty much the same as what we just discussed on dollar CAD, where we draw the fib from the daily high to the daily low. The 50% retracement here lines up really nicely with previous structure on the left. So again, break, retest. So yeah, I really like the technical setup here. The only downside really is the trends. So we can see the daily is bullish with the 200 and the 50, and the H4 is also bullish here with a failed break below this 200 moving average. So there is concerns here. I'm not sitting in this trade thinking it's a smooth ride lower. I think this may actually require another attempt at some point. I don't know when that will be, but this is one of those trades. If it doesn't work, okay, but I will give it another go. It's not a trade I'm married to by any means. GPUSD pullback. Let's have a look. So what level did you say? 1358. Oh, it's actually where it looks like where I drew it. Yeah, I quite like that. I mean, we've got the sort of double top here, nice resistance coming into play. We've got previous level here. Let's see, where does the fib line up? Not great. Actually, I would have really liked to see the 50% here, but either way, pound dollar, I would actually look towards this 1.355 level for a continuation higher. So again, sort of break the previous high over here, retest into the same level, and then again, that rejection continue. So that's the way I would approach pound dollar at the moment. But again, it doesn't line up with the fib, so it's a little bit low quality. Are you trading red folders? No, I don't trade news specifically. My general rule is 24 hours before red folder, I'll try to stay away from the trade unless unless I'm really confident I don't think that news could sway the idea. But I will never go into a position specifically for red folder news. I'm stuck at break even, not understanding how to tackle myself. Well, you're already doing fantastically well. So break even is actually the first point of profitability. If you're out of the stage of losing money consistently, you're basically there. You're pretty much profitable at that point. Excuse me. And the reason I'm saying that is because the road from like unprofitable to break even is extremely difficult. Imagine this is like a I don't know, a hill you've got to climb, for example. Whereas the road from break even to profitability is actually a lot easier to make. So really from this point, I mean, I don't know how you track, but I know nothing about you. No, obviously no offense intended, but I don't know you, so I can't really give you anything tailored. But generally speaking, from a break-even point to get to profitable, it's more a case of just refining whatever you're doing. So whether it's your accuracy, maybe you're taking your entries are just not strong enough. So your losing trades are maybe a little bit more significant. Your winning trades just aren't as big or big enough to cover your losses. Or it could be maybe the amount of trades. So maybe you've gotten over the over trading side of things, but you are still prone to it. So you're doing it maybe just not as much. So again, profitable trades are covering the mistakes you're making. Could be that. It could be a number of different things. I don't know enough about you to actually give you anything there. But yeah, I think again, if you are break even, you're already doing very, very well. Japan looks brilliant. Looks like a brilliant long-term investment at the moment. Why is that, Source? What's making you want to invest in Japan? A new toy to play with. You know what? Actually, whilst it's on my mind, while you just said that, we will look at it. So I want to clarify this super, super clearly. I'm not a stock trader. I say this all the time. I don't really know much about stocks, if anything, really, other than like surface level things. So all I know, I was looking through it. I was just taking a look at the stocks that were listed, taking a look at the charts and seeing if I could find anything. I didn't really see much, but Netflix popped out. So I think Nick said it actually. I don't know when or where, I can't remember, but he said something about Netflix. In a crisis. So let's something I've been talking about quite a lot recently is that my concerns around AI and the stock market and valuations and things. But I remember very clearly Nick said one of the things that people still kind of want and need, even if they are struggling for money, is entertainment. So if you've lost your job, for example, you're struggling to buy food, yes, you might have to cancel your subscriptions. But realistically, if you're paying, I don't even know how much Netflix is, to be honest. Was it like $5.99 or is that old? Is it like $10.99 here? I don't know. But anyway, generally speaking, people will try to keep their entertainment, especially if it's a force of habit. If you're watching shows or a film or whatever it may be, and you like that thing. So I think Netflix is a good company in terms of their foundations. So I quite like that I had to score there. And again, I'm not a stock guy. This is just my sort of view on it from a bit of a newbie point of view. So what we've got is pretty good revenue. Revenue seems to be going to the upside, pretty nice trend to the upside. Profit margins came down, but again, overall trajectory here, I would still say is to the upside. Net income seems pretty positive here. That's the gray bars. The daily, I don't really pay much attention to the technical side of the stock box or the edge finder because obviously I do that myself. But this is, excuse me, still quite positive. The sentiment analyst ratings, 13F activity is bullish. Layton's earning calls, all beats and bullish. Excuse me. Financial metrics, all undervalued. So I was like, okay, let me take a look at Netflix. So I found this. This looks like an absolute mess, but nothing on the H4, nothing on the daily, but the weekly looks really, really nice here. So the way I trade, obviously, as most of you will know by now, is I take fibs from lows to highs or highs to low, and I look for structure within the fib. So what we can see is on this weekly, the 200 moving average has come, it's been supported, or prices, the 200 moving average has supported price, we've seen a bounce. We've also seen a bounce around the fib zone, or in the fib zone, around the 50% retracement, and this does line up with previous structure on the left, this previous high. So this is a really clean sort of break, retest off this 200 moving average, previous structure, and the fib for maybe a continuation higher. Now, obviously, this is a weekly time frame, so this is more of a, I would say, more of a position trade. So it's probably not something I'm actually going to take, but I quite like it. And it's a good example of, obviously I am a bit biased here, but I'm not a stock trader. I got the stock box and I've already found a trade very simply. It's the same thing with the Edge Finder. So if you don't have these tools, I really would recommend you get them. And again, I am biased, but you can get a discount with code ELITE, and I wouldn't be here if I didn't actually use them and like the tools they make. Okay, let me catch up again. 2288, what did you say? James, please do explain. You will look into Stockbox to find good ideas. I mean, what all you go through to say it might be good? Yeah, well, that's basically it. I just saw the bullish reading, all of the bullish signals here. So, you've got undervalued readings, beats, bullish, bullish. For me, this looks quite good. The revenue, the profit margins, and net income. So overall, I quite like the composite of it. But again, as I said, I don't know what every single part of this means. I'm not a stock person. So please don't go and start buying Netflix because I just looked at it. I'm trying to learn. That's why I got it. So it's a case of me just expanding my basket of asset classes and things. So that's it. But I'll keep you informed. I'll let you know how my stock journey goes. King of Kings, good morning. Hope you're well. Do I get up in the middle of the night? No, absolutely not. Once I'm asleep, I'm asleep. I don't care enough about trading to do that type of thing. I think the way you should look at trading really is as a job. That's what it is. I'm not, if I worked in 9 to 5, I'm not going to get up at 2 a.m. to see if I've got emails. I'm not going to do the same with the charts. The argument for that or against that might be, what if there's a black swan event? Well, that's what risk management's for. When placing trades, you've always got to think of the worst possible outcome. That's why you've got, exposure limits and theme risk. So no, I'm not going to wake up in the middle of the night to check a trade. Thank you so much for responding. Do you think that a trader who is on a path to profitability, scaling up, should be on social media sharing setups? Well, it depends. I think it's a really good question. I would say yes and no. It depends who you are. It depends what you want, really. If you're trying to start some sort of service, I would say no, because you probably would want to do that when you're already, at the stage of profitability. But if you're doing it just for you and sort of hold yourself accountable, sort of in a public eye, then yeah, I would 100% do it. So, yeah, you could keep it almost like a public trading journal, I suppose. I wouldn't say it's good or bad. I would just say it depends what you want out of it. James, do you do only short-term trades? Do you have long-term investments? Short-term trades is like my bread and butter, yes. So I do have investments, but only in index funds. I don't pick stocks. That's not something I've ever done, which is actually why I've got the stock boxes, so I can expand my horizons. But no, in terms of my actual investments right now, it's just in index funds. Gold, got to go. Thanks for today. No problem, Vincent. See you soon. Hope you have a good day. We did look at gold, but we can take another look. Is full-time trading reality? What capital should a trader have to go full-time? I wouldn't say so. I think there are obviously traders that do it full-time, but I would say if you wanted to do it comfortably full-time, you would need, personally, I would say, and this is again sort of using my own trading as a reference point, I would say you would need at least sort of 2 to 3 million in capital. And the reason I would say it's so large is because you've got to account for the downtimes. So if you've got a large capital base and you can have a trade that would pay, I don't know, 3-4 months worth of bills and expenses, then you're not going to stress, because you can have that one good trade. And if you have some smaller losses in the meantime, it's okay, because you've still got everything covered that you need to pay for. But if you're trading, you know, even a $500,000 account, I wouldn't say is enough, because you're still going to be stressing. So you've got to think about it in percentages. So you would need to say, how much do I spend on a monthly basis on absolute necessities, you know, mortgage, rent, car payments, whatever it may be, everything, all your bills. Figure out what that is, then layer on top your general expenses, you know, entertainment, meals, dates, whatever. Figure out exactly how much that is on average every month. Then you would need to figure out the percentage. So, you know, if you spend, I don't know, let's say you spend 5,000 every month, then you would need, I don't know, let's say, what percentage of return do you average every month? So if you're averaging, you know, like 2% a month, what capital do you actually need for 2% to be equal to 5,000? Does that make sense? And again, I would even increase that even more to allow yourself a bit of a buffer. So there isn't a set number. This is where you go full time, but it's a case of, okay, well, what is your lifestyle like? What lifestyle do you want? What do you want to maintain? That type of thing. However, the other point of that is I still wouldn't want to do trading full time. Let's say I had 10 million or even 50 million, whatever it may be. I don't think I'd want to do it full time, because I just don't really want to do that. I like to, personally, again, I'm talking more about me in this case, but I like to build things. I like to do things. Trading for me is actually extremely boring. I don't enjoy trading. I do it because it's something I suppose I do enjoy it. That's not the right word, but it's not something, you know, I take pride in necessarily. I don't go around saying, oh, I'm a Forex trader. It's like, I'm an entrepreneur. I like to build businesses. I like to sell businesses. And yes, I trade on the side, but that's more just to get my money moving and doing something. So actually what I was trying to say there was you should very likely have some sort of side income as well, just to, again, provide that buffer, a little bit of ease of mind. So, you know, whether you start some sort of trading company or whether it's something completely unrelated, it doesn't matter, just something that's going to bring in money. So if you have a 6-month drawdown, which is absolutely possible, people do have that. A 6-month drawdown period is going to be painful if that's all you're relying on. Well, if you've got side business coming in, well, at least you can pay for the necessities. You might have to scale back your lifestyle a bit, but at least you've got something going on. Same here, James. I bought Stockbox and I want to know more. Yeah, T288. I'm going to sit down with the Stockbox probably next week and really dig into it. So I'll probably cover it a bit more later in September. Help me with gold. I'm down 500 US. Please help me, bro. Cut the trade. If you're down, just close it. There's no point. So the problem is, if you're down on gold right now, you bought at a stupid price. I'm sorry. I know that's horrible, but it's the truth. You have very likely FOMO'd into the trade. So my question to you is, why would you buy it right here after we've had, actually, let me just see what this move actually is. After we've had a almost 20% move to the upside. This is what, 7,400 pips, something like that. Why would you want to buy it here? So that's the question. First of all, you need to understand why you took the trade. The second thing is, why do you not have a defined exit? So I'm not going to sit here and rip on you, because I know how you feel. You know, I think everyone's been there. You're stuck in a bad trade. I get it. So you need to define, before you get in a trade, this is your lesson, where your exit is and why you're actually taking the trade, other than the fact it's been going to the upside. Now, to give you my actual idea, I would say gold is very likely to continue lower from this point, especially if we break these previous daily lows. Likely we're going to head towards 4,500. If you're already down 500 on this move, you're probably going to be down around 2,000 to 3,000 if we end up coming down to this level of 4,500. I would, roughly, I would expect. So cut the trade or set a stop loss right below the previous daily wick low, and that's really all I could say. It's a bad trade. I'm going to be. There's nothing you can do. There's no cheat codes. There's no fancy fix. It's one of those lessons that you got to bite the bullet. If the loss is too big, get out, because the likelihood is when you're in a big losing trade, you've always got to think of like the probabilities. What is the probability that gold has now created 3 wicks to the upside, failure to move higher after having an almost 20% move higher or to the upside? What's the chances of gold now coming back to the upside? I would say that's quite slim. But then what are the chances of gold actually having a little bit of a deeper pullback? I would say that is probably the highest probability outcome. Doesn't mean it's guaranteed, but again, probabilities wise, I would say this is probably the base case. So do you want to risk losing thousands of dollars because you didn't want to cut 500? I'm running out of time here. I've got about 10 minutes left. I know I've been talking a lot on this stream, so let me try and run through what's left here. Hi, James. Do we get some of the data like COT data from bank if US trying to buy their own US debt? Not sure. Are you talking about the treasuries that we saw, the buybacks? If so, no, that won't reflect on the COT data. You would look, if you're wanting to look at sort of the yields and the bonds and things, you would want to go to where you can do this anyway. You can overlay them or just open a new chart with like the US 02Y, which is the 2-year yields, or the US 10Y, which is the 10-year yields, or 30, which is the 30-year yields. And then you would also just be paying attention to general news flow and headlines and things. What's the money you? What's the most money you've made in a year? I'm not willing to disclose that. If you can't make it on 100K, you shouldn't be doing it. Well, I would actually argue that if you can't do it on like a $1,000 account, you shouldn't be doing it. I mean, it's obviously broker dependent. Gold size or gold position sizes. Like actually, gold's probably not the best example, but like the S&P, the Nasdaq sizes can really vary depending on your broker. Or value, I should say. So obviously it does depend. But if you can't make it work on like $1,000 to $5,000, you absolutely shouldn't be considering scaling up. If you do videos related on stock boxing channel, I would watch it. Okay, interesting. Maybe we will do some stocks on my channel then. US dollar Swiss is at key level. That's exactly what I'm looking at. Who said that? Usman. Yeah, I'm already in dollar Swiss actually. I think you're looking at exactly what I'm looking at. So I'm in a bit of drawdown here, which is a bit unfortunate. I would say actually in hindsight, my entry was way too early. I should really have waited for the level it's actually at right now. But either way, yeah, I mean, I'm short, so that should tell you enough. And the edge finder is very bearish on dollar Swiss. Sell gold. I mean, interesting. Or buy some puts to protect the downside. Source, I think he's probably talking about CFDs, but yeah, I mean, if you've got access to options and stuff, you understand it, that could be a way. I don't know much about options really, so I'm not going to talk about that. I don't want to give wrong information. It's a good time to buy gold. What indicator do you use? I wouldn't say it's a good time to buy gold. No. Just because we've already had it's basically what I've just said, the same thing repeated it. We've already had a significant rise to the upside. We've had 3 failures to break higher on the daily time frame. I would say we're probably in for a little bit of a cool down here. What did you say? Okay, yeah, so I would be looking, again, as I said previously, I would be looking to buy gold around this first fib. If this one doesn't work out, so if this fib level breaks down, I would just extend it to the full bottom of the range to obviously the high. In this case, maybe something along these lines into the moving average cross. So I think there's different options, different approaches for gold, but yeah, overall, I'd say it's quite simple in terms of just looking to buy the dips. And when I say dips, I mean actual dips. I don't mean dips on a 5-minute time frame. That doesn't count. As far as I'm concerned, anyway, especially if you're, if you're looking for gold to get to 6,000 or 5,500, trying to take a trade in a 5-minute time frame and be the smart guy with a huge risk to reward, you're very likely just going to end up in trouble doing that. As for indicators, I use a 200 EMA, which is this red one, and I use a 50 EMA, which is this blue one, and then sometimes I will use a RSI as well. Simo, good to see you. I've been well, thank you for asking. How are you? Also, Max, I've seen your name pop up. I didn't say hello to you, though. I do apologize. Hope you're well. Nick told me to come and watch you. Did he? Well, I appreciate the support from Nick. I'm glad you're here, unknown. D1T1P. That's a mouthful, isn't it? Okay, so yeah, we all seem to be in similar position, or similar ideas with gold. It seems like we're all wanting to be buyers, generally speaking. I mean, there's a few people saying shorts, but I would say, or I would imagine most of us are looking to be buyers on longer term. So that's good. But again, as I said, I do think gold is a little bit too extended at the moment. So personally, I would just be waiting. I don't think there's really any need to be jumping in at this time. Dollar yen, I'm still in these dollar yen positions. Really not much going on. So I've got 3 different open trades here getting positive swaps. So I'm very happy to just sit through whatever consolidation or noise. I've got really no problem just sitting through dollar yen. Dollar Swiss, as I said, I am currently in a short position. A little bit painful. Again, it's a negative swap trade, so I am losing money on the trade. for basically the whole duration. Gold, as I said, I'm in these long positions, and I'm still in an Aussie US dollar long as well, which is doing really, really well. I don't have a take profit. This is more just a mental level that I'm paying attention to probably take profits if the edge finder begins to drop off on its score. So yeah, I don't really have much else going on my side of things. As I said, I was away for the past 2 weeks, came back yesterday, so I'm still quite fresh to the markets. I've caught up a little bit, but I'm still trying to find some good quality trades, really. So I think silver would also be a really good long position on the 50% retracement. Again, this would be actually better than gold in my personal opinion. Fib from the low to the high, pull back into the 50% retracement, into the previous highs on the left, and a continuation higher. We did look at the Nikkei yesterday. So what I was looking at on this one is the daily time frame. So we've got the daily fib from the low here to the high. We've pulled back into the 50% retracement 3 times and rejected 3 times. The problem is with the Nikkei, I really like the technical setup. So we've got the daily that's bullish trend. The H4 is looking okay. The moving averages are really ugly. They're kind of just whipsawing up and down. So there's not really an established trend there. The edge finder doesn't have a reading for the Nikkei, so it's not a high quality trade by any means. But the idea is sort of building. It's there. Dollar CAD shorts, maybe. I'm not really that interested in dollar CAD. If we get to this 50% retracement, I will take an attempt, but it's not something I'm that interested in doing at the moment. Doing fine. Last day before holiday. Very nice, Max. Where are you going? You going somewhere nice? I would hope so. Ball out. Good morning. Good to see you. What else do we have here? Short term, we are having some shorts. Best to wait for the pullback, like you said. Yeah. Very good, Samuel. I like it. UJ sucks. It does suck right now, but I'm happy to sit through. As I said, I'm just collecting the swaps, and I do believe UJ will continue higher. Could take a couple of weeks, but I don't mind that. Collecting swaps along the way. I'm about to invest in gold. Can you indicate a direction? Oh, my friend, no. You please. Oh God. So you should. First of all, don't invest in gold shorts. And second of all, you shouldn't be giving someone an opportunity to give you bad investment advice on a stream. That it's a recipe for disaster. With all due respect, I'm not going to answer that just because I really don't like the framing of the question. I mean this with love. I mean this in a way to keep you safe and protected, but you don't seem like you know enough to be making decisions like investing in gold because you asked which way and you're asking someone you don't know about that. It gives me a bad feeling. I'm sorry. Again, I'm saying this for your benefit. I'm not trying to be mean. Hey, bro, do you trade Nasdaq? Yes, I do trade Nasdaq, but I don't really have much going on. I'm in a very small short position on the Nasdaq actually, which actually has turned around a little bit here. I don't have them marked up, but I've got 2 shorts. I've got one roughly around the lows, and I've got another one somewhere around here. So I'm pretty much break even, but they are very, very small position sizes. They're more just like a testing the waters type trade. If it continues lower, I can add a bit more size. If it turns around and doesn't work, I'll take an extremely small loss. It's not a problem. But yeah, I'm willing to just sit through a little bit and just see if we can get a bit of downside here. And the reason is because the Nasdaq was bearish. I think last week or the week before we had a bearish reading for the Nasdaq. That's obviously dropped off now, but we do have the S&P bearish. We've got the Russell bearish, and I think yesterday also had the Dow bearish as well. So I'm more just playing off the idea of the weaker stock market. But again, we'll have to see if it plays out or not. Do I have a free community? No, I don't. I do have a Discord, but yeah, no, I don't have a free community. Sell full margin. 1.16. Okay, cool. It seems like we're caught up on the chat. Bitcoin has moved quite annoying. I tell you what, we've got about a minute left. So let's take a quick look at Bitcoin. Actually, that's not. Where's my chart gone? Here. Yeah, I'll take a quick look at Bitcoin, and then I will hand the stream over to Alan. I'll be honest, Bitcoin is looking actually very attractive, but I can't justify doing anything yet. So we do have the weekly here that is still bullish, technically with the moving averages. We've got the daily. Oh, wait, hold on. This should be the H4. Let me turn that down. The H4 is bullish, but we've had a massive run here to the upside. I wouldn't want to be buying into this. I'd rather see a bit of a retracement and correction before maybe even before considering any long positions. The daily, however, is still bearish, but we've broken above the 200 moving average here. So maybe the way I would go about this, and to, again, as I always say, for clarity, I don't trade Bitcoin, so I'm just going to go off the technicals here. I would be drawing the fib from the low here to the daily high, looking for a retest, maybe into the 61.8 level, retesting these previous highs, looking for a continuation higher. This setup is actually very, very similar to silver in terms of the fib placement and the previous structure on the left. It looks almost one-to-one. So yeah, I would maybe be looking for something like this. But again, I don't trade Bitcoin, so it's not a huge interest of mine at the moment. Am I from London? If so, what's the best I don't know, man. I've never been to an in-person trading event. I think they're all a load of rubbish, to be honest. Unless you get real mentorship from like a real institutional trader in like Canary Wharf, I would say don't even bother. Anyway, ladies and gentlemen, it's my time to go. So guys, we have Alan Perez coming to take over the show, the one and only. Don't go anywhere. Guys, I'll see you all tomorrow. Thank you for being here. Stay safe. Don't get margin called. And yeah, see you later.
Hey traders, don't go anywhere. The show will be right back. I just wanted to tell you about today's sponsor, that is 8cap. 8cap is currently offering traders outside of the United States a huge welcome bonus when you create a new account using the link that is being dropped in the live stream chat or in the description down below. When you create a new account using our referral link, they'll give you a 20% deposit bonus to your new trading account. For traders who prefer trading on a brokerage rather than a prop firm, this is a great option in which you get a nice little boost to your new trading account. But I do also want to disclaim that terms and conditions do apply to this, so please see the full details using the link that's just been dropped in the live stream chat. Alternatively, you can scan the QR code that you see on your screen right now if you're watching from a desktop or a TV. 8cap has several regulations worldwide and is a very well-known CFD and Forex brokerage. So check out 8cap if you're interested in switching over and taking advantage of this really generous welcome bonus they are offering our subscribers now. As always with any sponsor, please do your due diligence to make sure that this is in fact the right brokerage for you and your trading style, as well as your own risk tolerances. Thanks to 8cap for sponsoring today's content. Now back to the show.
Their inflation prints came in hotter than expected, I believe. So we're going to verify that real quick. But I hope you guys are doing good. Besides that, I think nothing else has really developed. Let me go to Forex Factor real quick. See if I missed any other important year release. Nope, just Australia. Okay, so what happened with Australia? Month over month, 1%, hotter than expected. Year over year, hotter than expected. And trimmed mean, hotter than expected. Okay. So that explains it. That explains why when I go to currency strength, I see Australia in blue at the top of the list. And besides that, we got nothing else. So let me go to today. We have just our PCE, right? Just PCE and GDP. Tomorrow starts Jackson Hole. Okay, cool. So we had a pretty quiet day, I would say. I will say one thing. Do you guys see oil yesterday? Did you guys see oil? Oh, God. Hello? How about now? Can you guys hear me now? You guys should hear me. Yeah, you guys should hear me. Please tell me you can hear me. Yes, right? Okay, I'm not tripping, right? All good? Oh my goodness. How much of that did you guys hear, by the way? Because I went on a whole spiel. So I want to make sure that you guys can hear me. Only at the start. Okay, only at this. Okay. Please analyze egg USD. You know what? I might as well analyze egg USD. Okay. We can hear you clearly. Okay. Awesome. Well, basically all I said was I woke up later than usual today. So I'm catching up. I was talking about, start all over. Okay. We're going to do that. We're going to start all over. Top down. Woke up late today. Okay. So I was going to go through it. The only thing that I thing happened was Australian CPI came in hotter than expected. I just went to Forex Factory and confirmed that. Nothing else on the docket, which is why you're seeing on currency strength, Aussie dollars at the top of the list. I basically said it's going to be a pretty quiet morning. However, oil, right? Oil yesterday, I don't know if you guys caught that or not. I think it finished like down 5%. Now it's down another 0.6%. So yeah, I was basically going to ask you guys about the price of oil. It was making some significant developments to the downside. Oh my goodness, guys. My bad. Muted stream. All right. I need some water, guys. All right. Are you Filipino? Someone asked me. I'm not Filipino. I am Mexican and Salvadorian, born in the USA. That is my background. Okay, let's see. What else you guys looking for? Audio came at Forex Factory. Thank you, Carlo. You're the GOAT. What's the advice for gold for the news, bro? Gold, well, there shouldn't be any news right now. Not today, at least. It's pretty much behind us. We do have PCE coming out today. Let's see what it's expected to do. And then I'll talk about what the implications that could do for gold. So core PCE today, month over month, it's supposed to come in a little bit hot. We'll see what happens. If it comes in, bigger, the number's bigger than forecasted, then that's obviously going to be hotter. That's going to be bad for gold. If it comes in lower, that's good for gold. Basically, that's it, right? So inflation higher is bad for gold because it means that the Fed will likely raise their interest rate, and that would fuel the dollar and thus pressure gold, right? So dollar gold, you can think of it as an inverse relationship. Usually, stronger dollar, weaker gold, weaker dollar, stronger gold. There's some caveats to that as well, but for the most part, that's the kind of relationship between the dollar and gold. So in this case, if you were to see a kind of combination of higher inflation prints, then that would pressure gold. But I will say this, you have had a string of cooler than expected inflation prints in the US, and that is, giving to this fuel in gold, right? So I would imagine even one hot PCE month over month print really wouldn't disrupt the trade idea much. Now, what it could do is give us short-term pressures in gold and thus giving us a pullback opportunity to ultimately trade gold to the long side, which is what I'm doing, and which is what I think a lot of you guys here are doing as well, waiting for is a pullback. So a kind of hotter print today that gives us a pullback would be well received by myself, and likely I would be waiting to go ahead and buy it on any meaningful dips. Kind of the dips that I'm looking for would be 4560, 4520, 4400, basically the 200-day moving average, or this level right here, right? That's pretty much what I'm looking for. And then beyond that, you can look at 4200, though 4200 could be a stretch, but never say never. That's kind of what I'm looking for. And then across the board, I did take 3 positions yesterday, actually. So let me show you guys. The euro dollar long, it is doing nothing. It's flat, hanging out right here. We had yields lower. We had oil lower yesterday. We're continuing to see oil lower, yields not so much. But I do have this right here. Okay, I have this level on the 30 that we pretty much almost broke. If we break this floor today and continue lower, I think that the yield story to the downside has lots of momentum to go, and you see a weaker dollar. So I'm basically playing that game. Also, too, you had the 200-day moving average right there. The dollar tapped into it, rejected it. So I am certainly dollar bear right now. And so that's reflecting my positioning. So I have long euro dollar. It's flat. It's pretty much at break even. But I have it right here. Stop is below the 200-day moving average and the 61.8% retracement level. I also have dollar Swiss short, which is not doing too good. It's still below the 50% retracement level, but again, my entry point was right here. My stop is above the 61.8. And I also have dollar CAD short, which is also in slight drawdown here. I'm looking for it's kind of hugging the 200-day right now. So I have my stop above that, and then I'm looking to take profit here at the 1.3700 level of which I should probably extend my zone, shouldn't I? Let me do that real quick. This should be like this. Yep. Yeah, let me do that. I'm going to extend this one here. This is, I'm going to move this up this way. This is supposed to be support. And that stays as resistance. Okay, cool. So yeah, those are my 3 positions. So dollar CAD short, dollar Swiss short, and euro dollar long. So that is what I'm looking to do. I like dollar CAD a lot too because it's been pretty strong, right? So like this trend has been really, really strong to the downside. You're tapping into the 200-day moving average. Hopefully it sticks. And that's what I'm looking for. So yeah, that's pretty much it. I'm pretty much trading this momentum to the downside. You know, we've had lots of things that are just adding to this trade. You have the lack of hawkishness in the Fed, some potential division in the Fed, which is giving some unconfidence in the dollar, right? So that's kind of helping that as well. You have the yield story from Besant, right? Looking to go ahead and pressure those yields down. And one thing I saw a video, I forgot which one was it. Was it Bravo's research or someone else? Or was it Boyle, Patrick Boyle? But basically, they kind of implied or said that, you know, usually when any government official like this has an intervention or whatever, they say something, they usually have one extra in the chamber. You know what I mean? So that's what I'm thinking too as well. Like if yields don't come down, then I think there's at least one more thing to be said, one more whatever to be made, one more in the chamber, if you will. So I like that. And also too, talking about Besant, we did have the secondary sanctions, right? Which I don't know, honestly, if oil coming lower here is reacting off of to those sanctions. You know what I mean? Like, I don't know if oil lower is the market is receiving those sanctions as it's going to work for negotiations. So I'm just going to say that maybe, right? Because it was happened pretty close thereafter, but nonetheless, oil's lower, and if oil's lower, likely you have yields lower and inflation fears lower, and thus pressuring the dollar because you have less hike odds. Looking at CME Fed Watch, let's see what's going on here. And then I'll talk about Australia too as well, because I don't want to miss that. So yeah, we still have one hike priced in, one in December, and then you're done after that. So pretty good. Let me go to Australia here, what I'm looking for. So assuming that we have continued dollar pressure, I don't think that a breakout in Aussie dollar is off the table, right? So we have this level of resistance here, 1, 2. So if we do a breakout here, I do think that is very, very well possible that you break out and you tap into 0.67 or 76. I'm sorry, 0.76. So that's definitely not off the table, assuming that you continue to see dollar weakness. So yeah, again, you know what? A lot of these pairs could have breakouts. Like for example, euro dollar here too, right? I'm kind of playing the breakout trade, if you will, right? Right here. So this was resistance. You can break out and then you can tap 1.18. If you go to pound dollar, similar situation. It's kind of waiting for a breakout, right? You have this level here, this level of resistance, very clear as day. If you get the breakout, you open the door to maybe 1.39. So that's what I'm looking for. Let me look at the chat here real quick. Hey, Alan, Aussie CPI beat. Yeah, man. Okay, let's see. Alan, how many trendline touch points on oil? Look, man, the more the better. If you can get double digits on oil, that's better. So let's see. I know you're trolling me, ball out, but let me answer that question actually, because I know you, man. Okay, so 1, that's not a touch point. 2, 3, maybe you can call it, but nonetheless, it pops and dropped 1, 2, 3, 4, 5 times. So I think it's pretty good. It's a pretty solid trend line, man. It's a beautiful trend line, don't you guys think? What do you guys think about my trend line, guys? Is it beautiful or not? This is I gotta admire this. This is pure beautifulness. Let's see, 4-hour candle bullish flip on euro dollar. PCE coming in soon. I would hope so, man. I'm waiting for this euro dollar to shoot higher. That would make my day. What about gold? Sell or buy? I think you should buy and then sell immediately, and then sell and then buy immediately and go flat. You should not take financial advice from live streams, even from myself or anyone else on here. You should, try to just participate, go with the flow, understand what's going on, but ultimately you should be self-sufficient. A work of art. Thank you, Matthew. Someone had to say it. No one said anything about that. Who's ready for the dollar to drop? I'm definitely ready for the dollar to drop. Let's drop it, man. I think that this is what I'm looking for, guys. Right here, 30-year yield. This level right here of support. If you were to break this like little floor right here, then you definitely open the door to maybe 5.1, and then beyond that, you kind of go as you go. Also, too, just looking at this upward trend line here that we broke already, right? If you guys see this upward trend line, we have broke it. So now we just have this level, this floor that we have to break through as well. And then we're good from there. We're gravy. But we'll see what happens. Markets are unpredictable. So for me to say that I know for sure that there's going to be a break on the 30-year yield, that is absolutely false. Okay, I'm not going to speak in definite terms. Anything can happen. There could be a re-escalation. There could be who knows what that could disrupt this idea. But I'm basically telling you that I'm waiting for this to break. If it does, then the trades will work out. If it doesn't, then so be it. I take losses. Bald said, is that tequila? No, man, it's water. Come on. It's not sparkling water. You guys know I can't have carbonated drinks. I discussed this with you guys. Okay, you guys know my secret. I struggle with carbonated drinks. So if this was sparkling water, I'd be having a rough time on stream. With 30-year dropping, USD risk is leading more downside. I think that I don't know. I have to also think of the other side of the coin too. Like, is this a crowded trade now, dollar to the downside? Because I was definitely fearful of this being the case at 108, 102 when DXY was over here, right? I was like, okay, we may be getting crowded positioning. So I need to see what's going on with dollar positioning to the downside. So let's pull up our edge finder and see if we can spot something. Let's go to COT data history, see what the positioning is doing. So US dollar. Let's go top down, guys, because I actually want to know this too, because if it's crowded positioning, then I want to be more mindful of the risk that I put on. If it's not crowded positioning, then obviously there's more fuel to squeeze out of it. So with DXY, US dollar, COT data history, you can see that the trend is still upward. And then let me just look at the recent weeks to see if there's been any offloading whatsoever, which not really. So I actually like to see that. You can see that the only offload that we had was the most recent one, and that was a very, very tiny offload. But for the most part, you've had many, many weeks of just straight accumulation on the dollar. So I like to see that. So maybe not crowded just yet. Let me go to crowd sentiment as well. I'm just going to do retail sentiment, see what it looks like. Heavily. Oh, I like that. Right, so everyone's heavily short euro dollar, Aussie dollar, pound dollar, Kiwi dollar. For the most part, retail is majority short on that. So if I'm going long, that's a good sign. Okay, cool. Let's see net options volume for dollar. Bearish, but not extreme. I love to see that. If it's extreme like over here, then I'm like, but no, it's actually not bearish at all and has more room to go if it wants to get bearish. So I'm actually pretty pleased to say that I don't think as of now you have the greatest crowded positioning on dollar shorts, I would say, from what I've seen here. Do you guys agree or not? Let's go to put to call ratio as well. This one has been hard to read on dollar. Okay. Ooh. Put to call ratio on the dollar, though. High put volume. That would be scary. Okay. Well, then maybe you kind of have to be cautious of any surprise pops in the dollar. That's one out of many indicators that we just saw, though. We'll see how that cools off if it does. But again, we have to make sure that we're crossing off everything and not just nitpicking and trying to find what fits in our story. You know what I mean, guys? Let's see. Let's see. Yeah, you guys know. You guys know. I can't drink sparkling water. Euro USD news trading buy or sell. Is there news for Euro? Let's see. I don't think so. But I can give you my thoughts on Euro US dollar, though. I bought. It is barely getting out of drawdown here. Very barely. Had some drawdown last night. We had some support here at the 200-day moving average, the 38.2% retracement level. Yesterday, we saw some progress in the long end of the curve going lower here, getting very close to breaking what I think is a pretty solid level of support. If you were to break that, and then you kind of extend the legs lower. Hey, Nick, how you doing, man?
Hey, Alan, I'm good. Keep going.
Just giving my thoughts here on dollar and kind of my positioning here. I went long euro dollar, short dollar CAD, short dollar Swiss as well. So with the yield story here, you have this level of support. If you break that, then I think that we see some legs lower. You also had development in oil as well yesterday, down 5%, I believe, and down another almost 1 today. So if you keep seeing oil under pressure, that would be good for the inflation story. And I would say that that would help keep yields tamed as well as high probabilities tamed as well. And so with that, and also the string of not so good economic data for the US, I think that the trade of the season would be probably dollar shorts. And thus, I like euro dollar long because it makes up the majority of the DXY basket. So that's kind of the best way I could trade this DXY chart here. But any thoughts on that, Nick? Anything?
I like it. I think you're on the same wavelength. I think we're same team here on this lineup, because I think I'm kind of in the camp of thinking bonds can move higher, 30-year yield move lower, oil move lower, gold move higher, dollar move lower. Like, I'm in that camp, more of the dovish camp, more of the less inflation worries camp. I don't know. I think a big part of the reason, just anecdotally, would be the whole Treasury wanting to defend the 30-year so aggressively. I think that is, in the short term, a very strong goal point or a goalpost for them. Like, it's a really big, important aspect of the administration right now. It doesn't mean that it's going to be necessarily like completely successful with no fail and no problems, and that the bond market's just going to obey. But I think in the short term, it's a lot of willingness to support bonds. And I generally think that QE is really bullish for gold. So, like, I'm still in the bull camp for gold, just kind of fingers crossed here, looking for larger retracements on it. Are you in any? I know you took some profits off the table on your gold trade. Are you in anything right now?
Not on gold, man. I am on the sidelines as well. Gold would be the preferred trade, but for now, I'm going to be taking the dollar trade. But I am definitely a well receiver here of gold to the downside. So we'll see what happens. I wanted to ask you, Nick, on bonds. Do you think TLT is undervalued? Do you think they're undervalued, or is that kind of a hard thing to say?
I think that it's hard to say, but I think that Scott Bessent thinks it is, and that to me is interesting. Like, TLT has been destroyed in the last, however, for good reason. Like, let's be fair to the reason TLT is down so much. Do I think it's like easy, obvious, oversold? No, I don't, because you have all sorts of structurally higher inflation since the post-pandemic era. You have seen, obviously, the Middle East conflict, never-ending customer or consumer spending habits of the United States. It's never ending. And I saw something interesting. I was listening to somebody talk about it. In the past, you've had debt crises that are like unique to a particular country like Greece or the UK. But right now you have something that's like really freaky, which is like all the G7 nations, like all of them pretty much, are addicted to borrowing, like massive, massive borrowing, spending well beyond their means. It's a creepy story. I don't necessarily think that that's a thing that you can time, because it's been the case for a long time that G7 nations have been massive borrowers. But the intriguing thing about it is, how do you get TLT to rally? How do you get the bond market to freak out less? Well, you take control of national debt. How do you do that? Well, you enact policies that absolutely no one is going to do as a politician. Like, there's no reason as a politician, because you will just be hated. Like, people, if people in control of all of these nations did these sort of budget cuts at the same time as taxing the rich, they would just make everybody angry. Like, that's kind of what would need to be happening, is budget cuts and entitlements for the masses get destroyed at the same time that the rich get a tax much larger. It would be wildly unpopular. That's the sort of thing that has happened in Great Depression, right? That's how you kind of like reset things, is wildly unpopular, drastic measures that are no longer a choice. So anyways, I don't necessarily think we're like on the cusp of that. But in the meantime, it seems like a mission critical for the White House, for the administration, to keep the bond market under control and not freaking out. So I think that short term could be a case, could be a continuation lower in the 30-year. And either ways, regardless of it, I think the story still sticks that it is a bullish environment for gold on retracements, because that national debt fear, that trust in the central, banking system and the government system, as well as, not to mention, our kind of stock standard list of economic data that is softer for the US. We do get PCE numbers coming out here in just a few minutes. So we have generally a more bullish setup for gold in the regards to economic growth. Has been softer than expected. Inflation's been reasonably tame versus expectations. Jobs market data has been softer than expected. So I think all roads still for now point to bullish gold. Doesn't mean it has to go up. Things can change. Something could change in the mixture here, but I generally still lean bullish. That's my strongest conviction idea, at least right now, for gold.
Such a clean trade, man. It's one of those things that it wins in many scenarios, right? So if you have yields lower, that's obviously going to help gold. If you have yields higher, but because the market is just fearful and pricing in that risk, that's also going to fuel gold. So I do love that story as well. As far as like what could lead us to go down, because if you do get a meaningful drop, right, the question becomes, well, what caused the drop, and does it disrupt the overall long side narrative? I think one could be crowded positioning, Nick. That's one where like you could get a quick kind of fade lower, maybe get some fears, maybe you get like a false headline or whatever, and then you can go ahead and scoop it back up. But what do you see, Nick, could be a catalyst to drive gold lower?
See, the thing is, I really don't know what the catalyst will be. And to the credit, I've had a lot of people commenting on my stuff recently, Alan, that are like, Nick, you should just be long gold because there's no reason for it to pull back. And it's actually like, that's a plausible way of thinking. If you're kind of newer to this stuff, you're like, okay, so you've just mapped out all these reasons that gold is bullish. And now you're saying you're waiting for it to go down. But why would it go down if you listed all these things that are going to make it go up? Well, again, we never know with certainty what's going to happen, first of all. Second of all, I don't know what the catalyst could be that could get gold going. But if you were only looking at what is currently present and now, yes, there's a lot of bull cases for gold. Prices started to reflect that. If you want to talk about like, well, what's going to get it to drop like that? I don't necessarily know, but just when you think something cannot go down and it's so bullish and everything aligns perfectly to the bull side, that's when you can get something out of nowhere. Like, for example, some escalation in the Middle East that gets inflation really higher. Or let's just say Kevin Warsh takes a U-turn approach and he says, we're going to match our words with actions. Is it likely that he suddenly signals a bunch of rate hikes? No, but it could happen. And if it did happen, that's the sort of thing that would very quickly liquidate a lot of the gold bulls in the room and send gold lower. So I'm not necessarily saying that's what I think is going to happen. because I have to clarify this. People are like, Nick, what are you talking about? It's not going to pull back, because a lot of people are like leverage long chasing it. And I think that it's really important as traders that we keep an open mind. Gold could absolutely come down. Gold could come down further than that. And to be completely fair, gold, it's possible that it goes back down to the lows of the year. I'm not necessarily thinking that's what's going to happen, but I think as traders, we have to keep that open mind and ask ourselves, not if it's going to happen or with certainty, what are you going to like? Instead, ask like, what are you going to do if that does happen? How are you going to play it? It could happen. You know, put your ego to the side for a second and say, what if I'm completely wrong? What am I going to do about it?
So Nick, why not short gold then? If you know a pullback's on the horizon, right?
you know all the comment section too well, Alan.
Yeah,
that
man,
is exactly what they'll say next. By the way, I think we just had PCE numbers come out here. Let me just pull that up. Core PCE came in line with expectations. Core PCE. I'm wondering PCE year over year what that did in terms of market reaction. Let's see. Stocks little mixed here. Nas a little mixed here. Gold slightly lower on the print here. Bitcoin slightly lower. US 30 flat. Dollar index slightly stronger than expected. Nothing crazy there.
Yeah, nothing crazy. Headline came in same as last, so 3.7, and then core, where's core? Came in line at 3.3 as well.
Okay. Yeah. So someone's Yoshi says, I think it's a valid question. Yeah, Alan was joking when he said that, but it is a question that I get all the time. Like, well, Nick, if you think that, you know, it could pull back, why don't you short it? Well, there's a big difference between saying I'm open to a possible pullback. In fact, I'm hopeful that we get a pullback. That would be great. But I don't trade based on like, oh, I hope we get a pullback, let me short it. That makes no sense to me. In terms of like practical trading, I've mapped out that I want to be long gold, but that doesn't mean that because I want to be long gold, I'm going to short it. That makes no sense, right? So if we think about it, in my view, it's like if you have a bias, if you have a setup where like I want to be long gold, okay, great. That doesn't mean short it in the meantime, right? Just because I think, yeah, we might retest some of these areas. That would be great if we do. That's very different than saying I have a strong reason to put money on the line that I think this thing is going to go lower. Two different statements, right? And people ask that all the time. You'd be surprised how many times I have to recite exactly what I just said.
Your comment section, man, I love it. It is, I actually read it almost every day, Nick. Almost every day.
I do too, to my own peril sometimes.
All right, man. Well, I'll go ahead and let you do your thing. I'll be back here in about an hour or so. So have a good one.
Appreciate it, man. Alan, thanks for coming on as always. And we do have Chris Pulver joining us here in a moment, but I don't think he's here just yet. So we'll give him a moment and then we'll bring him into the conversation. We also had GDP numbers. So bear with me here. Just going to get this set up. Make sure we have that on screen. Let's see. Okay. Preliminary GDP also came in line with expectations, 1.5% versus 1.5% expected. We also had preliminary GDP price index came in slightly higher than expected. Core durable goods. I mean, this is a wall of economic data, by the way, guys. We had core durable goods came in worse than expected. Durable goods month over month came in higher than expected. Personal income was a touch higher than expected, and personal spending was up more than expected. So lots of data here. We could really take some time to break this down. Inflation was mostly in line with expectations. Preliminary GDP mostly in line with expectations. Preliminary GDP price index, right? So that's a little bit of a measurement of inflation here. While this is quarter over quarter data, hold on, what am I looking for? Measures analyze change in price of all goods and services included in GDP. So 6.4%. So that may be just a slight touch of inflationary pressures there. And just a recap of what we're seeing happening in markets. You've got gold slightly lower on this. Nothing major. This is a 15-minute chart. We're looking at the Nasdaq slightly red here. S&P 500, still flat on the day pretty much. Ignore the 15-minute candle noise. This is really still just a flat day. Dow Jones, same thing. We were more red, and to the credit here of the bulls, they've actually been able to rally back a little bit. Silver still in the green. Gold is in the red. Oil is down 1%. So we've got movement here, guys. And today is kind of the closest thing you're going to get to a Super Bowl late summer in the markets, because you've got obviously a bunch of economic data here this morning. We have Jackson Hole starting, which of course Kevin Warsh main event will be tomorrow for that. But you have Nvidia earnings after the bell. I am long Nvidia. I have a position here. I'll stop out if need be, but we'll talk maybe more about that later. So I am long Nvidia, and at the same time, still sitting at a good bit of cash. So with that said, I'm going to bring in Chris Pulver here. He is here for some of the conversation. Let me just switch this around. Hey, Chris, where are you? There you are. Hey, Chris, how are you?
Morning. What's up?
Morning. So today's, I mentioned it, maybe the closest thing to a Super Bowl that you're going to get in the summer months. It's typically quiet. We have maybe this week, I should say, because you have the Fed going, you have major earnings from the likes of Nvidia, a bunch of economic data here. What is top of mind for you? What are you watching closest right now in all the craziness?
Probably this range right here. I had this boxed in this morning. I mean, I know there's a lot of news and noise to digest this week. We had PCE this morning. We've got Nvidia after hours. Jackson Hole kicks off tomorrow. Warsh is speaking with Jackson Hole on Friday. This to me is what is the tell. I mean, if we are going to crack 7640 or crack 7700, that's the next kind of leg of wherever this market wants to go. And it could be a bunch of noise, but I would imagine there's going to be some at least poke or push one way or the other. We're clearly vulnerable below 7640. Unless this is, go ahead.
Let me interrupt you and ask you a real quick question, because I'm ignorant to 0DTE stuff.
Okay.
Let's say you sell a strangle, or like just as an example, like you sell a strangle on the day.
Okay.
Is it cash settled at 4 p.m. or the next day? Like, because does Nvidia earnings play any part, or are you done by 4 p.m.?
You're done. That's the nice thing is like today you could do SPX or XSP or NDX. You could play those indexes, and at 4 p.m., everything with gaps up or gaps down or anything crazy with Nvidia earnings, which it shouldn't be right at 4 p.m. by the way. But right, you are strictly like cash settled. So what is kind of fun to watch is if I have this chart, which is SPX, where this thing actually closes like yesterday, Nick, the market was open here, close here within 1 point. So at the money strangle or an at the money, if you did a short strangle, dude, or a short straddle, you killed it. If you did an iron butterfly, you killed it. So what I've seen in certain days is, let's say that this is exactly where the thing cash settles at 4 p.m. And if you go back to the CFD right at 4 p.m., let's say the market's like, we know Nvidia earnings were going to move. You can see this thing like spike, 20, 30, 40 points. And you're like, good thing I just got cash settled at whatever that price is.
Right.
So yeah, if you want to eliminate all that stuff, you can just trade the indexes. It literally cash settles right at 4 p.m.
Makes sense. Are you doing anything with Nvidia? Are you playing the earnings?
I am. You want to see what I'm doing? Check this out.
Of course I do. Yes.
Okay. This is the trade that I built on Nvidia. It's 3 different positions. They're all very low risk. Each one offering 10 to 1. This is so we'll say roughly these are about 30-cent debits for each contract, and I'll explain what these are. I'll kind of instead I want to scribble on this. So this one is a put butterfly spread. And it gives me up to about $4.70 a movement, which covers, I guess, 940. So if we're in like the 195 area, that's going to pay very, very well. The calendar spread, this is a call calendar spread, and this allows me to trade earnings where it pretty much gives me the entire expected move. So if Nvidia, which is notorious for staying inside of the implied move, and that would be around the 212.50 zone. And then I did a call butterfly spread up here.
So let me put it in dumb trader terms. So you have a situation here for guys and girls in the audience. Chris is an options trader primarily. He's playing Nvidia earnings being a huge event comes with a lot of potential volatility in the options market. When there's a lot of potential volatility, options start to trade really expensive. So what you've done here is you have a situation in which if the share price of Nvidia, which as you just alluded to there a second ago, historically speaking, is like not a big earnings mover. Like it typically kind of like a lot of hype, a lot of excitement, but it really doesn't actually move very much. You've got a situation here where if it doesn't move very much at all, you have a nice potential profit. You also have a situation where if it moves to the downside by a meaningful amount or to the upside by a meaningful amount, you have another possibility of making profit. The worst case scenario in this trade is that it has a very large outside move.
Correct.
Looks like you also have that risk defined as well. So there's only so much that it could work against you there.
Correct. So if I am dead wrong and price goes way higher or way lower, I'm losing about $100 a contract. Actually, less than that. It's about $90 a contract. But if I'm right, if I get one winner here, Nick, this is about $400 a contract.
Okay.
So I'm risking maximum on all 3 trades. I can lose 3 trades and lose $90. I can win 1 trade of the 3 and make $400.
Okay.
So I think the reward to risk is worth it. I think it's a way to dabble in, but that way it's not just a single bet. It's like, I think the one thing NVIDIA is great at is having the implied move be like kind of jacked up and elevated. People get directional. Everyone's buying calls in NVIDIA because it sold off on Monday. So what are people doing? They're buying calls now, which is fine. But I think it's a way to see. If you go back to earnings history on NVIDIA, you can see a lot of ups and downs. I mean, our last earnings print was here, and you can see it's just going to be very noisy. So, I mean, it's right here, like indecision for 2 straight days, 3 straight days. It's like, that's what NVIDIA is great at, is it gets everyone directional, or most traders are directional, looking for something. And, you know, in the back of my mind, it's like, I remember what just happened a few weeks ago. Amazon, way to the upside. Microsoft, way to the upside. Meta, Tesla, way to the downside. Apple, way to the downside. They all exceeded the expected moves. NVIDIA may do the same thing, which is why I put those butterfly spreads on kind of those extremes. Like if we're around or even through expected moves, I should have that extra buffer on those butterfly spreads.
Makes sense. Yeah, I do have I have a long trade open, kind of just I bought the retracement here last 7 days down in a row or so on NVIDIA. I bought some shares. What I may choose to do if I try and get fancy with it is I may sell some out of the money calls on it, just turn it into a covered call situation. But it's kind of interesting because right now, at least what I've understood or what I've been listening to, there's a lot of call skew going into the earnings. And what that means is most people, as you mentioned, directional bets, most people are buying calls out of the money, trying to bet that NVIDIA is going to have a big, surprise move higher. Obviously, it is possible that is the case, but there's kind of an interesting dynamic there where if everyone is buying calls, and this actually kind of explains, I listened to somebody talk this through. It explains why the options dealers who sell those calls, right? The options sellers are the market maker, et cetera. They're selling all these calls up here. What do they have to do in order to offset that risk? Well, they own the shares, right? So they own shares long, they sell the calls, and then the very next day to unwind their kind of play, they sell the shares and buy back the calls. And that's why so often you get this huge call skew before NVIDIA, tons of options dealers, selling the calls out of the money, owning the shares to sort of protect their risk. And then the next day, there's sort of an unwind of that trade. And that's why NVIDIA so often kind of just chatters in the next day or so. So you get this big unwind of the hedging. So I think it's a big mover. I would actually argue that maybe the more intriguing thing in all of this is more so not about NVIDIA itself, but about what it says or what he says, Jensen Huang says, the CEO, about the AI trade, about where things are going. There's a big pushback on the data center build out. Is that going to be a narrative that potentially festers further? And at the same time, is there any inclination that earnings or revenues will in any way slow down? I listened to somebody talk about, if they start announcing more buybacks or dividends, it may actually be a sign that they see less potential for growth and are reinvesting. So there's a lot riding on the narrative going forward. I think it's fair to say that NVIDIA earnings are almost certainly going to be better than expected. They have beat every earnings, every revenue guesstimate for the last 2 years or something like that. So no surprises there if they beat earnings. It's, do they beat enough and do they guide well enough that the market itself likes what they hear on NVIDIA and the AI trade at large? So, and then I think there's finally a third party pressure here that is very real. It's the 30-year. It's the bond market. What are your thoughts on all this, Chris? We've had 30-year cooling off a little bit, coming down here recently. the Treasury has been adamant about fighting this rise in yields, but there's a whole, there's so much drama in the yields world because simultaneously the Mag 7 offering up in the debt market is becoming attractive to foreign investors. It's creating competition for bond yields. Have you heard that narrative?
Yeah, I was going to actually ask you, do you think that we truly have beef between Stanley Druckenmiller and Scott Bessent? Do you think that's real? Or do you think this is some kabuki theater / some type of like headline manipulation, financial chess? I don't look. They've worked together for decades. They learn from one another. I mean, it's mostly Druckenmiller, but it's like Bessent was under Soros and Druckenmiller. I don't see them all of a sudden having just like public beef in an AI written op-ed. So
I kind of don't either.
I think this is a lot of noise. I still don't think that the yield market is going to just obey and like just back off. I mean, it makes me it's hard to believe to me that the government of all things, the Treasury, can step in and completely tame the market when it's like when you start seeing things that are intervention. I don't think to this degree it's like one step in of like, and it's not even reactive, Nick, it's preventative intervention. That's where I'm like,
yes,
I don't see that working. Like you remember the last time we had major preventative intervention with the Swiss National Bank, what that did to the markets? I mean,
yeah,
that to me is what I'm like, in the big picture, this could be very concerning if the markets, especially if they show this like short-term obedience, and then we just come right back up and press, 30 years hitting 5.3, 5.35, making fresh highs. That just puts the Fed in a very tough spot where it's like the Fed can't not raise if we're going to see yields continue to stay stubbornly high. So
yeah, no, I think it's a bind here that we found ourselves in with the whole Treasury, and there's also simultaneously the Bank of Japan stuff, which we've talked at large about. Dollar yen has not recovered through those highs. I have an unpopular opinion, Chris, because here's my unpopular opinion. I say it's unpopular because I actually feel like the narrative that it's not going to work and that the market is going to shrug it off and keep moving higher in yields, I think that narrative is pretty popular. Mm-hmm. Not to say that I think it's wrong, because I ultimately don't think intervention or government jumping in is like a long-term sustainable reason for yields to make a move lower. Like ultimately, It's going to ride on inflation. It's going to ride on what happens in the Middle East. It's going to ride on a lot of factors that are not controllable simply by, hey, we're gonna print money and buy our own bonds. Like I don't know that is a long-term fix. But my short-term fix, or my short-term opinion, is I think TLT could get a little bit of a rally going in the short term, just because the administration seems so adamant about not doing anything to make Iran worse, simultaneously buying our own bonds, and kind of subduing that risk to the 30-year. So I actually think from a trading perspective, this is not a long-term, I don't want to overstay my welcome kind of thing, but a directional bet to the upside on TLT, to me, I think has decent risk reward if they are able to hold things for the time being. Like we've also seen a round of economic data that I think actually sort of suggests like TLT, et cetera, could have a short-term bump. Like let's acknowledge that, for example, the 2-year yield has been subsiding here. PPI was lower than expected. Today's PCE numbers were in line with expectations, so nothing crazy there. Simultaneously, we have GDP growth. Today's number came in at 1.5%, so that's going to be in line with expectations when this updates. Overall services PMIs, retail sales, these numbers have been softer than expected. I think if you have any fear, I said this in my video yesterday, if there's any reason that people get worried about tech stuff, I think people are going to rush to bonds before they rush to tech stocks. So like if there is a reason that the tech world kind of wobbles in any way, there could be a demand for bonds, not necessarily because I think it's a safe haven, but it's safer arguably than if the tech trade were to get worried. So I actually think, bonds have been really beaten down. I think that they're showing some signs of a breakout. I think there's a risk reward here that maybe TLT has a decent upside move. I haven't traded in a long time. You asked me the other day, have I traded it? I have nothing on for TLT at this moment. Yep. But from a trade perspective, a defined risk type of perspective, Treasury seems absolutely adamant about getting something like TLT higher, bond yields lower. I don't hate the idea of as a trade looking for some long side. So that's my contrarian, unpopular opinion, because I feel like most people are on the camp of thinking it's not going to work. And I generally still do think that it's not going to work longer term.
Right.
But I think you may have a little bit of room for some rollover in the short term.
Yeah, I think what we're doing is, I think I mentioned this to you either last week in the shows or offline, but it's like, I think we're pulling forward and accelerating the ultimate print campaign that the government's going to be doing. Is, you know, we said, okay, we pivoted from Doge. So that's no longer like austerity is not going to work. Let's pivot, let's grow. So instead of trade war, it's trade more. That's 2025. We're now grow. AI is the best thing ever. Circular financing, nothing is wrong. Corporate profits are as high as they've ever been. Earnings are still beating, heavily beating. And so grow looked good until we have this like plaguing conflict in the Middle East. We're clearly trying to do something to sustain and maintain the petrodollar. That's the end game, I think, in the Middle East. But AI trade, it's a little exhaustive right now because we've had so much like record-breaking dispersion on the Nasdaq. The Nasdaq this summer dealt with almost a 12% correction, while the S&P chopped up to maybe a 2 to 3% correction. We had Russell, Dow, S&P, and equal weights hitting all-time highs, while the Nasdaq kind of churned through this AI stuff. So long story short is, I could see the AI trade still stalling, but going from this growth narrative to then, well, you know what? What's left? What lever can we pull still? We can still pull the print narrative. We can still pull the liquidity narrative and just keep this thing like reflationary. We can keep this thing like it's good for stocks. It's good for growth. It's good for scarcity. Like there's still trades here. I think the bull market's still intact. I really do. I'm just looking to see if the market's interested in maybe like a quick shakeout. Look, all this, like this week is going to posture the market in a really interesting way. Because remember, after this like 1 or 2 week window of how prices behave in Jackson Hole, then it's all about Middle East and midterms. And I know that's a couple months away, but September is historically the worst month of the year. We're going into midterms, and I don't know, man. If the market's at all-time highs, is that like, well, Trump's got midterms locked up? I don't think that's the case. I feel like you have farmers and hardcore MAGA supporters that are like, what is this economy? Like you've got, I was just back in the Midwest this last weekend, and people in Michigan complaining about these little small towns that are getting these data centers. They're like, we don't want this. We don't want this crap like stuffed down our throat. It's like, all it is, it's like 100 decibels of noise 24/7. And it's possibly going to pollute the ground table and possibly just be a huge nuisance. And
everyone's power bill goes up.
Yeah, it's like there's certainly the side of it where it's like people don't want this by force. So anyway, it's like I wonder if that shows up at the booths in the midterm elections. Maybe it does. Maybe it doesn't.
Yeah, I think it'll be. It's interesting because it's like I think your concept of like a spend narrative. I totally agree with that. Like I think like if you are in charge here right now and you want to stay in power, you have no other choice than to spend frivolously. Like you have to throw money at it. Like what is your alternative? Because I said this earlier, because Alan asked me a question. He said, and it was a great question. He said, do you think TLT long-term is oversold? And I said no, because I think like the bond market has crashed massively. And now in hindsight, if you have some sort of massive rollover, budget cuts, things like that, like a more aggressive Paul Volcker type move in the future, TLT is probably going to like look a lot better. People are going to look at bonds a little differently. But right now they're looking at a post-pandemic massive inflation, a government that is spending off the rails, not just in the US, but globally. Like we're seeing global yields move higher. And so it makes sense that bonds have moved lower as bond investors are like, inflation is everywhere. We're going to get much less out of holding bonds because inflation's eroding. So we want more yield, and for yields to go higher, bond prices move lower. So that makes sense to me. The question now becomes like, how do you fix it? Well, how do you fix like inflation and a massive, the national debt being this weight that keeps inflation sort of like mounted? Well, the only way is for, and it's the most unpopular thing that I don't think will ever happen until it has to happen, which is budget cuts for the populace at the same time that we have higher taxes for the wealthy. That is what would fix it. in my opinion. Not that I'm a genius on how to fix the national debt. No one's got a great solution. But the reason that is a solution is because it's like, okay, everyone tightens the belt top to bottom, and we live within our means. But the country does not want to do that. Nobody anywhere is like going to vote for that. Like that would collectively be vetoed. The only time, historically speaking, that massive debt problems have been fixed are by force through a lot of pain, like a Great Depression, where all levels of income get absolutely, humbled, right? Wealthy gets humbled, higher taxes, higher corporate taxes, higher, the population sees entitlements cut back. Like that's how you do it. And it can also wreck the country permanently. Like, for example, the UK had to do something like that. And it really, like a lot of the brain drain out of the UK happened in the subsequent, decades to come. People left the UK for more prosperous places that weren't riddled with debt like that. So it's a fascinating study. I've spoke, and I encourage listeners, you guys should do the same. I've spoken to Grok or Gemini, choose your favorite AI, about this constantly. It is a fascinating conversation. Hey, Grok, how do we fix the national debt crisis? And it will open your eyes to how serious they would have to get to do that. And no politician is going to do that, because it would wreck them.
The silly part, and this is not that it matters, but we had a president that just came into office that was approved on just doing that, but it made the bond market flinch, and it made the whole world realize we can't do this. If the U.S. want to stay with a solid stock market, we've got to pivot. We've got to focus on the growth. We can't make the bond market flinch like it did back during Liberation Day. Right. And so I think right now that's why there's so much effort on taming, pacifying the bond market, where look, the bond market is way larger than the equities market.
It's huge.
The Forex market is way larger than the bond market. But I'm looking at this is interesting. I'm just looking at like certificates to deposit right now, some fixed income vehicles at Schwab. You can go, 5-year yields and lock in 4.5%. Now, if you have the patience for that, now, do I trust that my 4.5 yield is going to get me inflation pacing or outpacing inflation? Not really. I mean, if I had zero expenses and I had a couple $1 million and I've got 4.5% that I could pull in, $100,000. Do you think $100,000 today is going to be the same as $100,000 in 5 years? Not even close.
No. 5 years ago, $100,000 was wildly different than it is today.
Look, man, some of my buddies that are in the financial advisor space, they're talking about some of their same clients that during, like, let's say pre-COVID, these were either single income families or dual income families that were making about 125, 150K a year, very comfortable, like able to live within their means, comfortable, about 125K, 150K for a family. That same family right now is hustling to try, and they're making like 250 a year now, and they're still like it's a harder existence. It's a harder standard of living to be making $100,000 more, because it just doesn't go as far with how everything else.
Well, and a lot of the older generation that may have grown up in, and this is kind of a older generation now, but this generation that saw high interest rates in the past got accustomed to the lifestyle of saving, that having cash in the bank built something. And a lot of people's like entire understanding of money circles around that idea of like, you used to get paid, cash used to sort of like maintain something to it, or even generate some kind of yield in line with at least inflation, but not anymore. I mean, now it's like, and again, going back to the narrative here, the narrative is the only solution that politicians actually choose to go for is not to cut spending, it's to expand growth, because that involves spending more in the hopes that the yield on that spending exceeds what you have spent, right? Like that's the solution. And so that is why the AI trade is simply, in the eyes of the government, like too big to fail. Like it can't fail. It has to. And at some point, will it? Like at some point, is there some really big, problem story down the line? Sure, but I don't claim to be smart enough to know
liquidity.
When
I think it's not really it's not the trade or the investments that fail. It's like we just run out of the money to spend to keep the growth story going. Yeah, like the CapEx bubble has happened multiple times throughout history, and it's always ended in a secular bear market. And I think the hard part now is we've gotten there with so much leverage and so much circular financing, where it's in the concentration of so few stocks better. I mean, again, like everyone that's connected to NVIDIA right now is trying to basically get paid, and like hyperscalers, they've had a lot of cash. They've depleted what seems like 90+% of it, and now they're issuing debt.
Yeah.
Look, there's still runway to that, but eventually
Agreed.
that CapEx story just goes from, it's a blank check, Nick, and all of a sudden that blank check flatlines, and then that blank check flatlines to then starts to decline. And if that change in spending, that rate of change in spending decreases, that's when it's like, oh fudge, here's the earnings revisions, here's the, that's kind of where I think the top is coming. But right now it's still a blank check, and there's still a runway to keep spending and keep pushing and keep growing. And that's going to come with these like speed rallies and speed crashes. And so just be ready for that type of volatility. But ultimately, I mean, I saw something in the Discord with the team. It's like individual stock volatility is going to continue to be record high. And that's going to be awesome, but also terrifying, because
here's
you can
Dick's
have
Sporting Goods down 31% yesterday in one day.
Wow.
It's crazy. Yeah.
Wow.
So just to your example.
So I mean, stocks like that, I mean, and those will happen left and right. I think I've got PDD and NVIDIA on today. PDD is after hours. NVIDIA. I priced out CrowdStrike and Marvell. I priced out like 10 earnings trades this week. I just didn't like any of them outside of NVIDIA. The reason I didn't include NVIDIA for the pulver alerts is because it's a bit complicated. I'm doing 3 trades at one time, and it's trying to manage the winner. So that's certainly not the typical like pulver alert option trade. So that's why I held off on that one. But obviously let you know how it goes, and we'll talk more about it on Friday. Yeah,
it's going to be interesting to see how all this shakes out. And again, from an overall perspective, it's like you mentioned, they're the big hyperscalers, Microsoft, Amazon, Google, they're now kind of dipping into the debt market. And I think that you said something there, that there is potential runway to that. Like, my thought process on it is, it's so hard to time this stuff because you still have big IPOs that there's a huge vested interest in keeping the market hot going into that sort of stuff. Could there be a story written on the wall right now where like OpenAI and Anthropic go public and that's like the top of the market? Maybe. I mean, I don't claim to like know these things, but that sounds like so picture perfect, as you get like the biggest names finally like, apexing, coming to market.
Yep.
And all the hype is like maximized for that moment. And then we see kind of a SpaceX type, kind of response, which is pretty muted, right? Big pop, and then now kind of fading off. So, I think caution in the AI trade is a reasonable position. Ultimately, I think the final word on this is you want to watch the bond market, because the bond market is absolutely king. It will send you the bill. If the yields keep moving higher, it's a challenge to the AI trade. And so that is why I think it is mission critical for the administration currently to keep those yields from rocketing much higher, because it is a severe thorn in the side of, kind of their whole agenda. So we'll keep an eye on it. Chris,
choice.
Yeah, go ahead.
I know, Rodgers. I was going to say, people will make the choice when you start to see like that fixed income vehicle I looked at for CDs. When people can make a choice and park a CD for 5+%, they can take a lot less equity risk.
Especially if the equity market looks highly risky, like if there's suddenly something that changes within that. So definitely worth mentioning. Chris, thanks very much as always for coming on. It was a great segment. And we will see you on the next one. We got our next show hosts starting. Guys, go find Chris Pulver on his own YouTube channel. Just search up the name Chris Pulver. You'll find him there pretty quick. Pops up all over on social media. Chris, thanks very much, man.
All right. See you soon. Thanks.
See you guys. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hi guys, Trader Tom here from Simply Forex. Hope you're all well. Hope you're having a good trading week. I'm going to take you through the Forex pairs that I'm looking at. I've had a couple of trades today, so we'll take a look at those as well. I'm currently in a trade. And we're going to start with US dollar. right? Because it's a bit of there's lots of things geopolitically going on. We've just had GDP and PCE come out as well. So we're going to take a look at US dollar and what we want to do with it. Now, I was very much interested in this as a sell trade, but then US dollar data come out better than expected. Like PCE, GDP were as expected, but all the other data was better than expected. So why was I looking to take this sell trade? Well, as you can see, we were in this downtrend, and then we've retraced to a really nice level of resistance, right? And we love this setup, guys. What was once support becomes very good resistance. Okay, then we're looking for a reaction at that level, which we got, right? And then typically, guys, if we go down on the lower time frames, I'm looking for a load of stop losses to be taken out. Okay, and as you can imagine, you see this last H4 high. When we start going into here, there's going to be a lot of retail trader stop losses, right? There's going to be a lot of liquidity there. And then the next thing I want to see is a big pullback into this level, and we end up with a candle that looks something like this. And we haven't seen that because of the US data that just come out. So this could still be a trade, and I might revisit it if we get some H4 candles that close back into that level. So that was one trade that I was geared to take, but then we couldn't because of news. And if we just look at US dollar at the moment, it's a bit of a, a mixed bag. There's a lot of US dollar majors at key levels. Because if you look at any of them, right, Euro US dollar, okay, and we go to the daily chart, okay, we're clearly in this uptrend. We know we've had all of this US dollar weakness, but we're at key resistance levels. Okay, if I just scroll out a little bit, you can see why that is a key level. So can we expect a retrace from these levels and actually US dollar strength? Right, so straight away I've shown you two US dollar pairs, and there's mixed messages there. All right, so any of them, pound US dollar, right, clearly at a key resistance level. Can we expect a bit of a retrace? Maybe, but ultimately I'm not trading against trend, right? I want price to come down to perhaps a level like this, and then I'm buying that US dollar weakness again. And if we go to the dollar index, that trade idea makes sense because that's what we're seeing on the daily chart with the dollar index, right? We're breaking down, and if we got a pullback into this level through here, right, that would be a really nice level for selling. Okay, I really like this level because not only have you got this horizontal resistance through here, you've also got our smart river, which acts as the mean of the chart. And if these two marry up, you've got a pretty good level for selling. Obviously, I'm not trading the dollar index, but that would play into that pound US dollar idea, right? Where we're coming off resistance, we're in an uptrend, and when we get back to a decent enough support level, we're interested in buying US dollar weakness again. All right, so yeah, I wanted to show you US dollar at the moment. It's just interesting, right? Also, guys, if you've got any questions about any Forex pairs you want me to analyze or take a look at, then yeah, please let me know. Please ask as many questions as you like. Also, a little bit of a disclaimer, I have badly bruised my ribs and I am on some seriously strong painkillers. I don't even know what day of the week it is at the moment. But so if I face plant on my desk, you know why. I should be all right. And then earlier on, guys, let me just show you a couple of trades that I've taken, okay, and the reasons why, right? So the first one is pound New Zealand dollar sells. There was a few guys in our Discord that really like this trade as well. But basically, we're here, okay? We haven't broken these highs. We're getting lower lows. We're in a downtrend. There was also this level here that was interesting, right? If that was, causing any doubt as to we're going lower, we broke that level as well. And then yesterday, we had a nice big bearish daily candle, right? And all I wanted to do was come back down to this support, right? I'm not going to go any further than that. All right. If we break that level, then of course we'll look to take the trade again. So daily is basically my direction, and then the lower time frames I enter on. But I do have a look at the weekly chart as well, because I just want as much confluence as possible, right? So every trade that I make is a business decision. Okay, so I try and collate as much information as I can across multiple time frames to make the best business decision I can. Okay, so makes sense. And you can see here, guys, right? Big bearish wicks, and just look at this big bearish candle. And if we do break this level, we have got a lot of free air, right, down to these lows. So weekly supports my idea. And then on the H4, again, as I explained with US Swiss franc, right, I'm looking for these levels, right? You can see that is a key level on the H4. And you can imagine there being some stop losses in here, okay, which is liquidity, right? That's where I want to trade from. I heard it from a trader the other day. They said, where you want to put your stop loss, that's where you should be selling from in this trade, right? And it makes perfect sense, okay? So that's what I'm basically trying to do. Now, as you can see, guys, I got in a bit earlier. We actually had this big H1 candle breaking down, but we was getting such a bearish reaction up here. I entered early. Normally, I would wait for the candle to finish. And yeah, basically took 80% of the profit off this trade, right? So my trades are always 1:1. I typically take some profit, close 80%, sometimes 70, sometimes 50, and then I let some partial profits run, okay? So that's pound New Zealand dollar, and that was the reason I took this sell trade. So as you can see, guys, and how I was explaining, there's just lots of confluence there. There's lots of reasons to take that sell trade. And again, guys, I'm not a swing trader. Obviously, you can see that. This is my trade from there to there. I take some profits, and then with my partial profits, if you like, I'm a bit more of a swing trader, and I'll let some profits run. But very much an intraday trader. So that was the first trade. And then the second trade we've taken today is pound yen. Okay. And we're looking to buy this pair. Again, why do I want to buy it? Well, this is the reason. So on the daily, right, you can see we're getting structure build up, right? We're starting to see these higher lows, higher highs. Okay. We've got a bullish daily candle. Okay, right here. And what I like about it is that the close of this candle broke these highs in here, right? Because price was stuttering at that level. Buyers have broken that level. That suggests buying momentum. All right. And potentially we can leave some profits to run up to this resistance. So daily's telling me I can buy it. I'll take a quick look at the weekly, and typically I'm looking at the weekly candle, right? And that is super bullish. And interestingly, with pound yen, we're still in an uptrend anyway, right? Can we potentially take price up to here? Obviously, with yen pairs, you're constantly in fear of yen intervention. Even the US Treasury got involved last time. So you do have that in the back of your mind. With regards to yen pairs, but I can't trade like that, right? I trade what's in front of me. I'm not trading what if yen intervention happens, right? You just can't trade like that. So yeah, that's why I'm buying it. And then if we look at the H4, guys, we're getting candles that are starting to close back in one another, right? That tells me sellers are coming in at this level. And also, guys, right, this is really the last swing low on the H4, right? And we're kind of holding on to that level. If we look at the H1 as well, right? Yeah, I'm just looking at this. Do I like this trade still? Yeah. No, we're still fine, right? I entered on this bullish H1 candle here, put my stop well out of the way. And we're just trying to take price up to there. Let me go back. So this is a live trade, guys. I don't know if it'll work out or not. I just trade my system. Do I still like it? Yeah, even if I like it because we're in this uptrend. And even if sellers did want to get involved, right? You can't help but think, you know, price will be pushed up to somewhere like here, then we get some sellers involved, right? So we shall see. I'll also put my alarm here. And if price comes and hits that again, I might take some profit off this trade and let some profit run. So yeah, sorry guys, just sort of working out this trade as I'm in it, right? I'm trying to manage this trade. So yeah, that's what I'm looking at. That's what I'm in. But let's take a look at a few of your questions, guys. Okay, so we've got a few people wanting to look at US dollar, Canadian dollar. Okay, we'll take a look at that. Max, hi Max. Max also took pound New Zealand dollar. Yeah, good stuff. Yeah, I don't think London and New Zealand trade with each other. Anyway, let's have a look at gold. Let's have a look at New Zealand US dollar. Let's have a look at US dollar, Canadian dollar. So all US dollar pairs, if we look at New Zealand dollar, US dollar, right? Like I explained earlier with all the US dollar pairs, we're at key resistance levels or support levels, right? Now, I get it if people want to trade that retrace, right? You're at key resistance. You know, I'll be look for things like H4 breaking down. Okay, I would say that hasn't broken down yet. Okay, we're still here, right? We're still holding on to that low. If the next candle breaks it, then okay. I think potentially we can come down to the next support level, right? But again, I don't want to trade against trend, guys, right? I get it if you want to trade that retrace, but I'm more interested in the retrace, price coming back to a level of interest, right? This level right here. And then we get a bullish reaction in here, right? That's the trade I'm interested in, not against trend. But ironically, with US dollar, Canadian dollar, US is at an interesting level, okay? So if we just look at this structure here, we're in this downtrend, right? And this is where we're at. So we're clearly in this downtrend. We have bounced off of this key support. If I zoom out, you can see why it's a key support level, right? Price has just hit it many times. But it's come so far away from that level that this could potentially be a sell trade, right? Back down to these lows. We know that we've just had better than expected US dollar data. I know PCE and GDP were the same, but all of that data together was quite positive, and we're seeing some US dollar strength off the back of that. But, right, the daily chart right now is not telling me to sell it. Even this candle isn't telling me to sell it. But tomorrow, if we get a wick that looks something like this and comes back into these highs, then I'm very much a US dollar, Canadian dollar seller, right? It's an if, right? I'll come back to this chart tomorrow. If we look at the H4, I'm sure it's breaking some highs. Yeah, you can see that here. So if we end up with something like this, okay, so we're breaking H4 highs, we're in a H4 uptrend. But if price ends up pushing back down here and we end up with a bearish looking daily candle, then all I'll do, guys, is look for this level, right? If price comes back up to here, we can grab some liquidity in there. Excuse my drawing. I'll be looking to sell US dollar, Canadian dollar. So a lot's got to line up for me to do that. But I do think it's an interesting level to sell US dollar, Canadian dollar from. Bear with me, guys. Quick cup of coffee. Does anyone like Liverpool Football Club? Does anyone like football? Did you have World Cup fever in the States? Yeah, there you go. Like a bit of footy. Right, what else are we looking at? Gold is on the move. Okay, so let's have a look at gold then. Okay, so again, you know, I want to see a break of structure. This is the H4, right? And there is no better indicator than a break of structure, right? There just isn't. Let's start with the daily though, right? So we know gold has been flying. And let's remove some old support and resistance levels. You know, if we start looking left, this would be the next area we would consider looking at. This level here, right? These would be the levels in this uptrend that we would be looking for as targets. Okay. Now, again, the thing you have here is this, right? We are clearly strongly trending. Okay. So obviously I don't want to sell this. I want to buy it. But up here, there's no value for me. I'm not going to start buying there, right? You know, I want to buy from here, for example. If we can get back to those highs, you know, I'm very keen on buying gold from here because it represents value. But buying it up here, you've missed the move, right? I mean, it does depend what your strategy is, what your time frame horizon is, but trade from value. Right? Don't trade in overextended, overbought, oversold markets. Now, for that reason, when things are quite oversold and then we start seeing bearish daily candles and we get a H4 structure break, which we may or may not get here, let's keep an eye on it, then I can understand trading the retrace, right? Because things are so overextended. But it's just not a trade for me. It's not how I trade. I want to trade with trend. All right. But I get that trade. I understand that trade. And even if we got a bullish reaction here, I still don't want to buy gold because there's no value. So gold for me, for those reasons, is pretty much a stay out. Okay. And obviously it's pinned against the US dollar. So, you know, what I've explained about the US dollar, that's a bit of a mixed bag at the moment as well. So, yeah, gold, no trade for me. But, you know, if you are in a buy trade, these would be my targets, you know, take some partial profits. Yeah, that's what I would be looking at. Right, what else are we looking at? Good morning from Kenya. Good morning. Nairobi is the capital. There you go. Liverpool is king. Unfazed, you are my favourite member. Tottenham Spurs fan, commiserations. Okay, so Joshua Schwartz is trailing gold, looking to get out once we touch the daily 21 MA. See, Joshua, right? Joshua's in this buy trade, right? And the 21 moving average is probably about here. Okay. And he will be looking to get out of the trade if price touches the 21 moving average. But for me, the 21 moving average is a good place to enter, right? Because, you know, whether you trade the 20 EMA, the 50 EMA, these are very good areas of dynamic support and resistance, right? So if price retraced to the 21 MA, let's say this yellow line is the 21 MA, that is a wonderful buying zone. And I would not want to get out of the trade, right? So yeah, that's how I see moving averages. I see them as dynamic support and resistance and good levels to trade from, right? And if you're in a strongly trending market, right, the 20 EMA, MA, not much difference, is a good level to trade from, right? Some people prefer the 50. The 50 will be here somewhere, you know, right? If perhaps the market's not strongly trending. So yeah, just an idea, Josh. Liverpool, Sheldon, good man. Oh, he's short. Okay, fair enough. And so the 21 MA would be your target. Okay, yeah, good. That makes perfect sense. Okay, what else to look at? I love the way I mentioned football and everyone has got involved. I can mention several trades, you know, that not interested. Oh, you mentioned football. Let's discuss football. Right. Have we got any questions about trading, guys? Yeah, let's have a look at a couple of things I'm potentially looking at here as well. So let's have a look at my pound yen trade. It is a live trade. Okay, let's take a look. Yeah, not much happening there. I also liked a couple of other yen pairs. I did like euro yen for a buy trade. But we're just at a sticking point, right? This last high, it just keeps sticking at this level, right? I need a clean break, but we're not getting that. So euro yen has yet to convince me to buy it. If we look at the H4, yeah, that's definitely not convincing me to buy it, right? We've got a wick that's closed back into that level, which does make me think about my pound yen trade. But let's see, guys. Look, you can just see euro yen is at that really nice support level. We are in a bit of a range, right? And I would just be looking to trade from here back up to here. But I just haven't had an entry trigger yet. Yeah, still haven't. Aussie dollar yen, I also liked, but that has left the building, right? A lot of the time, you know, you like a trade, right? So Aussie dollar yen, you're right. I'm like, I want to buy it. But sometimes the market is gone, right? There is no pullback. You can see my alarms, right? I was interested in a pullback to at least there, and it just didn't happen. So didn't get into that trade. And let's have a quick look at US dollar Swiss franc as well, because I'm still interested in this trade. It'll be really interesting to see how the market reacts to the US data we've just had, and if it just brushes it off, right? Because if we do get a H4 candle that ends up closing, if this candle ended up looking like this, and we've got a big bearish red candle, if your candle does look like that, please speak to your broker. Apologize for my drawing. I'm going to have another go, just as bad. But if you get a big bearish candle that closes back into there, you know, you can't think that a lot of stop losses have been taken out and we could potentially come lower. And remember, guys, I'll be typically aiming for this level here as my first target and potentially letting some profit run down to here. Yeah, and those are all the trades I was looking at today. Anyone else got anything else that you are looking at, guys? Everyone's enjoying gold. Let's have a quick look at oil, just for my own interest. So yeah, we're getting a bit of a sell-off on oil, but it is at these last lows here. Right, you can see that's quite a key level. Not that oil has been respecting levels, right? It's been very geopolitically driven. It's been flying through support, flying through resistance. But you can see there's definitely a level through there. So it'll be interesting to see if oil holds here. on the daily. And if we do, perhaps we could see some Canadian dollar strength come through. But, you know, we've got the US Canadian tariffs as well. So that's been weighing on CAD pairs. And then let's have a quick look at the indices. Yeah, so price is retraced. Yeah, this is the S&P. And then price just doesn't know what to do with itself, right? If we get a break higher, then potentially we can come back up to these highs. If we get a break lower, not interested because we're at key support. Yeah, so we'll keep an eye on those as well. All right, guys. So, yeah, those are the things I'm looking at today. Thank you very much for your time. Appreciate your questions. And well done, all the Liverpool fans. You have picked the right team. All right, guys. I'll see you next week, same time. Have a great trading week.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good to be back. Make sure you guys are joining that Telegram channel, guys. Seriously, go ahead and join. It's completely free. It would make my day if we see you with the engagement. That would be awesome. Hope you guys are doing good. Let's see. Nothing really has happened besides the data points that we saw here for the U.S. this morning. I did see something Hormuz related on financial juice. Let me go ahead and find that on this monitor here. Give me a second. Financial juice. Where was it? An agreement with Oman over the strait has not been finalized, but they are working on it. And then you have, I believe, the president saying something about Hormuz as well, that Hormuz is functioning. There's a lot of oil pouring out of Hormuz. I'm curious to see if there's continuation today with the downside that we did see in oil yesterday. So it was down 6%. Let me fact check that first real quick. It ended the day down 4.62%, but it was ultimately had a range of about 6.6%. Yeah, so we'll see what happens. I do like this. I would like to see what happens if we get to that 200-day moving average. That's kind of what I'm looking for as well. And for that, I stay with my positioning. So I still am going to be positioned dollar short, right? So we are tapping back into that 200-day moving average right now, it seems like, right over here. So we'll see how that reaction happens. If we blow right past through it, then the trade is a stop loss, or my trades are a stop loss. And then I move on with my day. If that does happen, then I would look to short at more premium levels on DXY, maybe 100, maybe this 100.4 level. There's lots of areas where I'd be interested in shorting dollar, but that's what I'm looking for right now. We'll see what happens. 4-hour time frame, yeah, nothing too crazy there. We'll see what happens. But I'm going to stick with my positioning. Gold seems to be selling off today too, down 1%. This could either be a very, very shallow pullback or just down day that gets bought into, or you could start to see kind of a continuation. So if you see a continuation in the dollar strengthening and gold tumbling, then likely I get stopped out of my positions. But what that would mean is that likely I get more pullbacks in gold where I could look to buy it. So it's kind of where I'm at right now, but nothing has really changed, to be honest with you. A big candle right now might be an insider push. Max, which asset class are we talking here? Joshua. Yeah, man, Joshua, if you were at the stream yesterday, man, I'm selling a course for $65,000 a month, and you can master my secret strategy, man. It worked out really well yesterday. In fact, I threw away the actual charts of it, like the drawings and everything. But I mean, look, man, it's down today 1%. You would have made a killing. Alan, I took USD short and will short USD CAD around 99.5 DXY. Let's see, 99. Where's 99.5 at DXY? Okay, so this right here. So this was previous support, turn resistance right around over here. Yeah, makes sense. That's a good level, I would say. Likely if you do break the 200 on DXY, you likely do tap into that level rather fast. With dollar CAD, my stop, I think dollar CAD, my stop is super wide too. Yeah, it's pretty wide. Or actually, no, it's not. In fact, I should probably, this is previous resistance here, right around here. So my stop should have been higher at, let's call it 1.4. So what is that? That's a pretty wide stop. So this turns into a 1-to-1. That's a 1-to-1 right there. Just happened. Euro dollar stop loss is pretty wide too. It's way below the 61.8 at 1.15600. So this is also a 1-to-1. So it seems like I'm playing 1-to-1s this week. So yeah, that's what I'm looking for there. Let's see, DX euro dollar. So the 99.5 handle that you're speaking of, Sluggy, on euro dollar is likely this level right here. This one right here. That's it. So my stop is just shy of that. So we'll see. We'll see if it gets there. Yields are up today. Let's see the 30. Finding some support there, right? Not loving that, but it's finding some support. The 2 is up 1.15. Oof. And the 10 is still struggling too. This is kind of like the range for the 10 right here, which is this level with this level up here. Range trading on yields. You guys are talking about Alan, quick answer, ball out. I'm interested too. Okay, let's see. What's the question? I think best course money can buy. Does the course cover liquidity? Oh God. Liquidity candle. So you guys want my thoughts on liquidity? I don't know, man. I feel like it's tough to distinguish liquidity influence or liquidity driven movements on something like Forex, where you have a highly liquid market that transacts 4 to 7 trillion a day. I really don't know. I think those concepts could be better. What's the word, man? Better distinguished on something inefficient where you have one centralized exchange, like for example, the stock market, where you have an order book where orders flow through. It's one centralized exchange, and you can obviously see heavy blocks or heavy like flows right instantly. When it comes to like on the Forex chart, when it's decentralized, so what you see is not what you see everywhere else. There's various different liquidity providers too, right? Like you have multiple banks at play. I don't know. It's just really difficult on something like currencies. Not to say it doesn't exist, but how would I distinguish it? How would I find it? No idea, man. That's why I kind of stick to the higher time frames too. Kind of filter out that noise. Hope that answered your question, though. Let's see. Every position in the market is liquidity. Making it some special concept is, excuse my language. Yeah. I mean, yeah, that's fair to say. That's fair to say. Yeah. This is like a highly efficient, highly liquid market, you know? Like to say that you're going to take advantage. Like if I was a, and I feel bad because I always like talk down on it seems like, but if you were to be an ICT trader on a Forex currency pair talking about liquidity sweep, like there's really no liquidity sweep to be taken. Like it's a highly efficient market. You know, like the cool thing about Forex is like if you have, I don't know, $1 billion ready to be deployed on euro dollar, you can get in right at the same price as me, and you're not really going to move the market. You're just another order in a big pool, big ocean. Now it's different for stocks, right? depending on the stock. Is it a large cap, mid cap, small cap, right? If you have a billion orders that you want to deploy on like a small cap, for example, or a mid cap, you have to be creative with it. You have to probably do it in blocks, or you probably have to do different things. Who knows, right? But like, it's not the case with currencies. So for me to say that I'm playing a liquidity sweep on a 1 hour or 1 minute chart on euro dollar, like, dude, you should have no problem getting it. Like, there should be no manipulation needed to get in currency. So if there's no manipulation needed to get in currencies, then what are you kind of trading off of? You know what I mean? But I don't know. I digress. I'm also not very educated on the concepts, right? The SMC and the ICT. So maybe I'm missing something. That could be also the case. Balla says, I don't like that explanation. I want my money back. I guess you didn't read the clause, man. There's a 1 minute money back guarantee. And I ran the clock on purpose, brother. I'll stick to Edge Finder. Yes, you should definitely stick to Edge Finder. You should definitely. And I'm not just saying that, guys. If you guys are in the chat here, you don't have a copy of the Edge Finder, get yourself a copy. It would make your trading a lot better. I love it. I love it. It's a great tool. It's so simple to use. And it's been helping me a lot in my trading. I'm sure you guys will love it too. You can also get a free trial as well. So definitely do that. Alan Fake SMC Trader Expose. Yes, man. That is me behind the scenes. All right. As soon as I go off the live stream, I drop down to the 1 minute on gold or 30-second, whichever one I'm feeling that day. And I print money, man, left and right. I just do this for fun. Yeah, that's true. Some people will think I'm serious. Yeah, I'm not serious, guys. I trade longer, higher time frames, macro swing trading. Very, very simple, very boring. My levels are boring. They're just basic horizontal levels. My trend lines are also very boring as well. You can see here that on oil, I have just a very super simple, easy to mark downward trend line. And I just do that, man. Maybe a moving average here and there. You know, I have a 200-day SMA on every chart that I use. And that's about it. And I just trade macro and I just wait for fib retracements, break and retest. That's all. It's really that simple. You really don't have to overcomplicate it. When you overcomplicate it, you invite so many decisions that you have to take. And that's where you make mistakes. Nasdaq going up. Time to buy Nasdaq. I don't know, man. What do you think? I'll take your lead here, Serge. Serge, you tell me what I should do with Nasdaq, and I'll do it. Ellen 500 lot with sketchy broker. Yeah, it's funny. I actually had a story, not a story, like it wasn't involving me or anything, but someone did mention to me that they had a very sketchy broker. It was offshore, and they were going crazy on that broker. I mean, they were making money, right? But they were making money by like having this insane amount of lot size per trade. I think it was like, I don't think it was 500, but I think it was pretty high. And they turned that account around, you know, like they really did their thing on that. And it was a live brokerage too. And they had deposited at like, I don't know, 10K or something. And so they grew it from 10K to, I don't know, 50 or something like that, something crazy. But because it was an offshore unregulated brokerage, they lost the 40K in profit plus the 10K that they originally deposited. Ellen, as the news on dollar came in as expectation, will the UZCHF and UZCAD get some score change? Will they lose the score? If it comes in line, it likely does not move the score at all. It reacts to beating or missing expectations. So likely you just continue to see the same score that it's at right now. And it moves, it fluctuates too, because maybe the Edge Finder score won't change the score based off of the data figure. But if you say you have an update on dollar CAD or dollar Swiss, then that's going to change the trend score. And so then you'll see it like that, you know? So it takes into consider everything. Joshua says 500 leverage is rookie numbers. The pros use 2000. Bro, use 2000, man. And it just takes one move and you're out of there. Margin is calling your name. I've never played with like insane leverage like that. but I'm sure the adrenaline is insane. But also, too, in the U.S., you really can't. Like, you just have regulated. I mean, you can, I guess. You can have an offshore account, but it doesn't make sense, too. Man, that coffee is fire, bro. That coffee is so dark. It tastes like oil. It tastes like I'm drinking straight out of a oil rig. Can you analyze pound dollar? Sure. Let's see what's going on with pound here. So pound, very, very strong in recent days. Probably trying to break out here. You're at some resistance here. I will say, though, the pound dollar, along with every other thing against the dollar, is pretty strong. So I would imagine that you either get a pullback where buys buy into it, or you get a break and retest, either or. But the story is in favor for dollar downside. Hey, Marco.
Yo, what's up?
What's up, man? Nothing much. Nothing much. I did take 3 trades.
Oh, whoa. Which ones?
Euro long, euro dollar long,
Okay.
dollar short, and dollar CAD short.
Nice. So pretty much a heavy bet on a weaker USD.
Pretty much. I am very correlated, 100% correlated on short dollar trades right now.
Cool. Well, that's my thinking as well. For me personally, I like the Aussie, but USD CAD is not bad. I think I look at the Edge Finder and the data in Canada is improving. Like the unemployment rate is falling, starting to kind of round out the top. So that's positive. And you have like Carney growing some balls and finally standing up to Trump, which is another added bonus and may tell us that Canada is kind of starting to come back. And that's something I've been seeing lately. Like it seems that it's open season on the current US administration. Like everyone seems to be dunking on Besant at the moment, or they were dunking on him like last week. Could Trump be the next guy that people start turning on? Because so far they have been pretty, let's say, light on him. And what we could see going into the election, we could see some more attacks and some more criticism on Trump. With it being reflected, or will it be reflected in the markets? I don't think so. I don't think it matters much for the markets. The midterms definitely do matter. So the winner of the midterms will absolutely matter.
Yeah, I wonder what that effect is on the market. You know, I would imagine that Trump would have a hard pitch going into the midterms, right? Like you've had, you know, one of his things was like no wars. He's not going to get us into any unnecessary wars. And we had a conflict with Venezuela, now with, you know, Iran. And we also had some tariff drama as well with other countries as well. So that's problematic. You have, you know, elevated inflation throughout the presidency. There's lots of things that it's going to be a hard thing to, it's going to be a hard case to be made. My question is like, that's very obvious. And is the market pricing that in already? And if not, well, what would that reaction look like? I think it just depends on who the majority is, what they plan to do. But definitely a tricky subject to trade. I'm really focused right now, Marco, is like on the macro data. That's the only thing I could really control in the near term. You mentioned Aussie dollar looks really good at, and I should probably think of maybe integrating that as well. They did have a hotter than expected print there on their inflation reads this morning. With Aussie, I'm looking for more of a break and retest situation or a pullback. Very, very easy, very vanilla. You know, you either get a break of this level here, retest, and then continue higher, or you get to pull back into, I don't know, key fib, which would probably be at 71 or 705.
Well, one thing that we could expect is less tariffs if let's say Trump and the gang or the Republicans mainly lose the midterms. I think then implementing the tariffs will be much harder for Trump, and that could be, well, it could have an effect on the US dollar, and it could have an effect on other currencies as well. Well, where maybe the US dollar loses even more value, because what the effect that we saw recently with the announcement on tariffs on Canada, the CAD lost value against the US dollar. That's why we had the recent push and a good entry level to sell it, which I think Nick did and you did as well. So if the tariffs are kind of toned down or removed, that could be even more bearish on the USD. Again, it depends a lot, but it could be the case. But that is pretty far away. So for the short term, we have the Jackson Hole, which is this week. We have the NFP, the PPI, the CPI, and then finally the Fed. That's tradable in the near term, let's say. And in my opinion, trading it through the USD is the best way to go. Gold would be good as well, like buying gold on pullbacks. Although it doesn't seem to be pulling back much, like it's pulling back today, but I would need a bigger one, like to the 200 SMA probably.
For sure. Like you're seeing a red day today, but this is very, very minuscule in the grand scheme of things. Marco, what are your thoughts on yen pairs? Anything fresh there? Me personally, I think that you could actually see more downside in yen pairs, or and more strength in the yen, downside in the yen crosses. I'm kind of looking at this level here, this one, whatever this is, this right here. If we break above that, then likely you see another drift higher. But as long as we defend this level, Marco, I'm pretty confident that you see some strength in the yen, and then you probably see either choppiness on the side or a continued like lower. I think that the creative financial engineering of Besant here with the bond market was also a way to help Japan as well by offloading some of that old US debt, allowing them to do so by buying that back. That way they can reinvest into their domestic bonds. And that was actually a really solid reaction that dollar yen saw on that. So when that announcement came out, this is that red candle for that. It was well received. So I would imagine that if it does go through, which I think it is, that could be a situation where, Japan's able to get their money back and reinvest in themselves, and that would create more downside in dollar yen. But what are your thoughts on that? Are there other forces at play, or is it just that one thing that can keep it lower? What are you thinking?
That is a good question, and something I have been talking about for a while actually on the yen pairs. So if I open up my UJ, the forces in play are definitely bullish on the yen. So you have a couple of things. You have the GPIF, so the pension funds, they should be selling foreign assets and buying domestic. That should be going on in the background. So far, it doesn't seem to be helping the price at all. So I would kind of actually maybe discount this as a reason for a bullish yen. Then you have a hawkish BOJ where they may hike on the next meeting, and they can actually do back-to-back hikes, which would definitely tell the market, hey, we're turning the leaf, we're doing something new, and should definitely help the yen. You also have an intervention possibility that we had here, and it was a massive one, 30th of July, and you have Scott Bessent kind of helping Japan, helping the BOJ, helping the MOF turn the tide. So a lot of stuff in the background is happening. What I'm seeing, the only thing that's actually working is an outright intervention. Like I have 4 things here on my list. The Scott Bessent thing, yes, we had the drop here, but then we retraced immediately, almost back to the initial level. We have the GPIF in the background. It's not doing much. I mean, UJ is just trickling higher again. Intervention seems to be working, so the big move still hasn't fully retraced. I think the thing that could really work would be the hawkish BOJ, right? So a hawkish BOJ could basically turn the tide, and if they do back-to-back rate hikes, that would be super effective. But then they sacrifice a lot where the Nikkei suffers and a bunch of other things happen in the background. Again, will they commit? We'll see. For now, I'm still bullish on the yen, but I want to see the next BOJ. I want to get some forward guidance if it makes sense. And if we go to the rate probability website, just take a look at the rate probability. BOJ September 17th and the next on October 29th. So a month from now, or a bit less, 3 weeks from now, we'll get the BOJ. 76% chance of a hike. So if they start the hiking cycle, I mean a real one, I think that could be bullish. What do you think?
I think I saw a headline saying that they are going to. I mean, they're for sure going to rate hike. I think that if I were to give my personal take on this, I think that even if they were to go on a rate hike cycle, it would take some time for the rate gap to really start to narrow in to a point to where it's significant enough to really deter the trend. So for me,
Okay.
I'm like, I want to say that my floor in dollar yen, right, would be somewhere right here. Let me do this instead. This is kind of where I see dollar yen's floor at. I'm going to say right around here. And so that I think there's going to be a lot of noise, right? But if I can somehow get dollar yen and get some positions right around here, I'm very happy. I'll probably dollar cost average into this area if I can. And then ultimately, I think that if I look forward 6 to 7 months from now, maybe 10 months from now, I think that we see dollar yen at 160 at least.
Okay.
So I think that the case to be made for a normalizing Bank of Japan is very true. I just feel like it's going to take a lot of time to see that translation. And so until then, I want to buy as much of a dip as I can. And even if I'm chopping around here, I'm perfectly fine because I'm getting positive swap.
Would you do UJ? Since you're
Yeah.
very much short on the dollar, you would do UJ?
Yeah, I would buy UJ for sure.
Okay. Yeah, like I'm looking at the situation, and intervention is not a long time permanent fix. Like an intervention can push the price lower, but I don't think they will come back in unless the price goes above 165 again. Maybe they don't come in at all. So the only thing that can actually turn the tide would be a super hawkish BOJ, back-to-back rate hikes, and just a lot of tightening on their end. So far, it's not looking so good for the yen. I know I've been preaching being long on the yen. So far, it's not been working. So if the market shows you that things are not working, well, you should probably change your thesis. What's your take on bonds? So what are the key levels? Let me ask you this. So which yield are you looking at? And what are the key levels to tell you the market has committed to higher bonds or lower bonds? Because in my opinion, we're still pretty much kind of flat in this range. My focus is on the 10-year yield. But do you have a different opinion?
Yeah, so when I look at the price action for the dollar and I look at the significant legs lower, it was more so because the long end was lower and not the short end. So this is August 19th, 2026. If I go to the 2-year on August 19th, where's that at? Look at this candle. Very significant. So for me to say that the 2-year yield was the reason why dollar fell so hard, probably not a good assumption. But if I go to the 30 and I look at that same August 19th candle, August 19th is this big one right here, right? Okay, there's a correlation there. So for me, if I'm wanting to play dollar weakness, I want to look at the chart, the yield chart that is having the biggest impact on dollar, and that's going to be the 30-year. So for me, I'm looking here at this level of support, which is 5.15, you can call it. Yeah, 5.150, right over here. And I think that if you were to break this level, then you open the door for another leg lower. And then as far as the next support goes, no idea. Maybe that's over here, right? If you extend this thing to the side, maybe it's this, maybe it's down here at the pre-war level, or maybe it's the 200-day moving average. Who knows? But what I'm looking at is like, okay, I'm looking at this chart. It has the biggest impact on dollar right now. It has really clean correlation to the dollar. If you break this, then I'm probably going to target this level right here. And if it continues falling, then I see more downside pressure on the dollar. So that's the one I'm looking at the most right now. So I'm basically eyeing this level here. Now, we got pretty close yesterday. We didn't have follow through, which is concerning for me, right? Because like maybe this is support that's well received, and then you continue chopping around. That could also be the case. But I'm watching the 30-year on this one right here on that level.
Yeah. And something that like traders need to understand, correlations never fully work. So you had periods where the dollar went opposite of the long end or was following the short end. So that's also a tough thing in trading, determining when the correlations are working and are not working. And you had a bunch of correlations that worked before COVID. I think Aussie dollar and oil was highly correlated, which kind of stopped working after COVID for some reason. the interest rate differentials, they were a big thing in Forex. So when the differentials moved, usually you can chase the price, and the price would chase the yields, the yield differential. After COVID, it was a bit tough to trade, and it's not a super reliable signal anymore. So yeah, correlations change, but I think right now there seems to be a correlation where the dollar goes down as the yield, the long end, goes down. So if we do break that key level, the dollar should go down a bit more. But then again, if we panic, if we get a kind of yields going up, if we get a big sell-off in the long end, that's also not that bullish on the dollar. So logical thinking is telling me, like, no matter which way the long end goes, well, if it slowly grinds up, it's not going to be bad for the USD. But if you get a big pop, a big sell-off in TLT, let's say, could be bearish for the dollar, because it means panic, and it means the US is no longer such a favorable country to invest into.
Yeah, one thing I've been saying is, like, with gold, right? Like with gold, if you have yields, I say gold wins in a lot of scenarios. Like if you see yields lower, then that's obviously going to benefit gold. But if you see yields higher, but because the market's pricing in risk, that's also going to be good for gold. And I think the same goes for the dollar index, right? Like if you see yields coming down, that's obviously going to pressure the dollar. To your point, if you see yields going up because risk is higher and people are just not as certain as the dollar, right? Or you're playing the debasement trade, then that's going to also pressure dollar too, right? So I think I'm pretty aligned with that. I'm very, very open-minded to just shorting dollar on pullback. So right now I have a short position. I have 3 short positions on the dollar, but if they get taken out, I'm also looking at right here. This is, previous support, possibly turn resistance. This would be a textbook trade to the downside. But yeah, I think the dollar right now is really hurting, and I think that in a lot of scenarios it just comes out on the bad side of it. So that's kind of the thing that I'm playing right now. And to your point, correlations do change. If we look back 3 weeks ago, the 2-year yield was driving the dollar. Now it's the long end, right? Because it's just the talk of town. It's where everyone's kind of focused on right now, is the long end of the curve. So that's what I'm watching, man. I'm watching DXY. I'm watching the 30-year, what happens at this level, making sure that the correlation sticks, and we'll see.
Yeah, and that's like the interesting part about trading. So I read it somewhere, I think from Brent Donnelly. If you take someone from an Ivy League school, like Harvard is Ivy League, right?
Yeah.
So essentially, you take someone from an Ivy League school, you put them in a trading company or an investment company, and you tell them, develop a trade idea. Usually, they will develop some super cookie cutter idea that is already priced in and that doesn't have any edge at all. Same thing, for example, if you test out ChatGPT for trading signals, which I'm doing in the background, and so far, like, it's purely break even for like 6 months. So in trading, the whole idea is to find the mispricing, to find out something that no one else knows. And at this point in time, one thing that I can find is the market is still expecting the Fed to hike. That's probably not going to happen. So that's your mispricing right there. And if you can find the same thing with bonds and with Besant, well, you can have another edge. So that's why what they teach you in school is totally counterproductive, I would say, for developing trade ideas, because you're trying to be a contrarian here and finding something that not a lot of our people are aware of and putting money behind it. So just a side note.
Oh yeah, man. Oh yeah. I agree with that too. And I think that that, for example, too, right, the long end is still pricing in restrictive Fed, right? So that's that discrepancy. That's that divergence there. And it's still elevated. So if you start to roll over, then you really start to see the trades play out. But Marco, I'm going to go ahead and pivot out here, man. Thank you so much for the talk. Hopefully we see some downward pressure in the dollar. We are testing the 200-day moving average. So that's kind of what I'm looking at right now to see if this actually does hold. If not, then I guess the next level I short from would be 99.5, 996 at this support turned resistance.
It's not a bad level. I think that's my next level to scale into more dollar shorts.
Yep. All right, man. Well, thank you so much, man. Take it easy. And I think too, we have, sorry, 1 second. Tomorrow we do have Tokyo CPI, so in Japan. So we'll see how that plays out.
Okay.
That'll be definitely a market mover for anything yen related.
Yep. And the PCE today, I think, came in as expected. So that's pretty much a non-event.
For sure.
Well, yeah, thank you very much, Alan. This was pretty fun. Looking forward to speaking with you tomorrow, and good luck with the positions. I would really like to see the dollar just melt lower.
Me too, man. Me too. I'm fingers crossed, but again, nothing's guaranteed. But I am waiting for it. We'll see what happens. I think I'll know by today.
Sorry, what do you mean?
Like if you see the dollar either rejects the 200-day or breaches right past through it, I think we would probably have that known by today.
Okay. Yeah, yep. We'll see it. Absolutely.
All right, man. Take it easy.
You too. See you. Goodbye. Okay. Let us continue. Let me get my charts up here. So for today, I only have the Aussie dollar as a position, which did benefit from the hotter CPI print. I have gold where I'm looking for pullbacks. I can put an alert here around the 200 SMA. So let's do that. And I'm looking at USD CAD potentially. So USD CAD, where is it here? USD CAD, maybe to hit the 20 MA and then to sell it at that point. Because the data in Canada does seem to be improving a little bit. If you look at the unemployment and you look at CAD, it's starting to improve. Okay, it's starting to become better. You're getting this surrounding top that I mentioned where things went up and now they're starting to turn over, starting to go lower, starting to become dovish, not dovish, but let's say hawkish. You can say the central bank can be more hawkish if the unemployment is going lower. They can focus on inflation and they can potentially do higher rates. If we look at the rate probability, let's just scroll through this. So for the Fed, I don't want to look at it because I have my take on it. ECB is hawkish. 89% chance of a hike on the next meeting. Okay, BOJ, Bank of Japan. Bank of England. Bank of England expected to stay flat and then hike later. Bank of Canada, not such an aggressive curve. I can see maybe 27, you get some hikes. And the RBA is already at a pretty high interest rate. So already running a pretty high interest rate. We may get a hike or two, but not much. So you can use this. By the way, this is free to access, except all of these smaller ones. You can use this to structure a position. So if you have an opinion on the Fed, which in my opinion is dovish, so I'm looking to sell the dollar, you can identify which central bank is pretty hawkish. BOJ, in my opinion, is more hawkish because I'm probably expecting back-to-back hikes. I think that can actually happen. Like the government in Japan is losing popularity. The inflation is a bit higher than expected. The yen is losing purchasing power, especially against the dollar. So if they start the hiking cycle, UJ can go lower. But it's an expensive thing to hold. It's an expensive position to hold. BOE, no, not much. BOC, no, not much hikes. So, I mean, ECB is on a path of big hikes in the future, like 89% chance of a hike and then possibly a couple of more hikes in 27. One thing about the euro, though, I wouldn't want to play it as there's a possible energy crisis up and coming. Essentially, so Europe, big energy importer. Energy prices are elevated at the moment. Not by much, but they are elevated. And they're going to have to import a bunch of oil. If oil is more expensive, it's going to take more euros to buy dollars to buy oil. Okay, so you need to sell more euros. So the effect can be bearish overall on the euro as a currency. That's why I really don't want to play it as a strong currency. For now, the Aussie and the CAD, do seem like fine currencies to go long. Okay, so those are the picks. Before I continue, I want to mention, if you're looking to get funded, do take a look at Ola Prime. Ola Prime is the sponsor of today's show, so you can get 20% off with A1 Live, with the code A1 Live. Now, there's no consistency rule with this prop firm. Definitely do make sure you read through the Trustpilot. Absolutely go through the Trustpilot. Whatever you're buying, especially in the trading niche, Trustpilot is your best friend. So Trustpilot, definitely read through it. 4.5 out of 5, 3.4K reviews. Those are good stats for this niche especially. And we have a couple of traders in the A1 Trading Discord who have gotten steady payouts. So that's always good to see. And they're happy with their experience. Do take advantage of the discount, because it gets you a better price than some of the competitors, like, I don't know, FTMO, 5%ers, E8 markets. So with Ola Prime, A1 Live, you get a pretty good price. To continue, stock market. What is going on here? So let's take a look at my VLO. Gapped up a little bit here, or so gapped lower. PSNL. I got a short on BMNR, but that's not according to my breakout strategy. That's a different strategy. For stock picks for buying breakouts, I need the SPY to be above the 50, the 20, and the 10 EMA. Guess what? Today is not that day. We are below the 10 EMA. We have been below it ever since the 20th of August. So I'm not looking for new positions. If the SPY can climb back above the 10 EMA, well, then it's going to be game on to look for breakouts on some of these positions. I have the watch list built. So I have maybe 20, 30 companies. Okay, this one is actually setting up Shark Ninja, setting up for a nice breakout here. I like it. I like it a lot. So I have the watch list built for potential breakouts. Nothing seems to be breaking out, as most stocks are following the SPY. It's normal. Just see this. Yeah, nothing much. Quick scroll through the list. I'm also focusing on a couple of sectors to build a watch list. Let me show you that. So on the stock box, if you have the stock box, you can go to the top sectors and you can focus on the top performers in the top sectors. So just a second, wait for it to load, and then I can show you. Yeah, so as far as I'm in two positions, as far as positions go, VLO and PSNL, those are like stock breakout trades. This one is just a position that's more tied to Ethereum. Essentially, this is a short on Ethereum because this company deals with Ethereum. Just because Ethereum is super overextended. So yeah, not going to go into the strategy too much. It's also still with small size, but VLO and PSNL are looking quite well, trending up. Maybe they continue. The way to exit positions with this strategy is you wait for a close below the 10 EMA. So if VLO closes below the 10 EMA today, I'll manually close this position. If PSNL goes down, closes below the 10 EMA, it has to close below. I'm going to manually close the position. Again, you do it like 5 or 10 minutes before the market close. You don't have to, well, you can't wait for the actual market close because you then won't be able to execute, but you get my point. Let's see. See, basic materials, oil and gas, gold miners, they're getting pretty high scores. Energy as well, biotech, regional banking. So those are some of the better sectors out there. And if you want to help yourself, if you want to filter out the best performers in the space, well, just focus on the stocks from these sectors. For example, VLO is from oil and gas, energy. Or here, XLE, energy, okay? So that seems to be working pretty nicely. Are you a fundamentalist like Nick? Well, I use all types of analysis, whatever I can get my hands on. I use technicals, fundamentals, sentiments, seasonality, edge finder, newsletters. So wherever I can get an edge, I'll use it. The main part is the way that I structure positions, and that is I stack confluences on top of each other. If I have 2 or 3 reasons to take a position, it's probably worth taking. So let me just hide this. So for Aussie dollar, the edge finder, there was 3 reasons to take this. 3 basic ones. First one, edge finder was bullish at that point. Second one, I'm expecting the Fed to be more dovish than people think. So I'm expecting a repricing of the Fed watch tool, which is bearish for the US dollar. Third reason, the RBA was hawkish at the last meeting, so that's bullish the Aussie. And actually, fourth reason, the chart looked fine. So the entry price was close to the 20 MA. I thought that was a pretty good level to take a stab long on AU. So 4 reasons to get in. That's pretty good. If you can have 3, 4, 5 reasons to take a position, the probabilities are stacked in your favor, and that is what you need. So trading is all about probabilities. There's no certainty in this game. There's only probabilities. You're building probabilities, you're stacking confluences, and you're putting the edge in your favor, right? You're putting luck on your side, if that makes sense. So over time, you'll make money. 1 trade, 2 trades, 3 trades, that's not an edge. 100 trades, a year of trading, 2 years of trading, then you can prove you actually do have an edge. Okay, I have ran out of time. Thank you guys very much for watching. You can catch me again tomorrow. So I'll be doing 2 segments. The schedule is on the A1 website. And Shaq family, hi Marco, how is your performance this year so far? I think 25%. You can check it out on Darwin X0. My ticker is OHGE. So I'm up around 25%. Do not go anywhere. Tiger is coming on in 20 seconds. Good luck, and I'll see you tomorrow. Goodbye.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? Happy hump day. Happy Wednesday. Hope you're all doing wonderful out there. As always, let me know what tickers you're looking at. Got potential trades set up that I'm watching. So it's going to be on dollar CAD, one of our most bearish assets. So we'll take a look at it. We did have obviously quite the dollar data dump earlier. So when it came to the main items, the PCE, the preliminary GDP, the quarter over quarter number, that they obviously met expectations right on the dot. However, we did have some lower impact data that came out as well. Some medium impact price index data, obviously your durable goods orders, and your personal income and spending, which all beat expectations. So while they are lower impact, you group a whole bunch of those items together like that, stack them together. As far as I'm concerned, it's as good as the next folder up. So even a little bit of a red folder. So anyway, pretty good data. And overall, we have obviously seen a little bit of a dollar spike. If we take a look at the Dixie over here, 7:30 my time. That's where this data came out. So this green candle on the Dixie over here, and you can see we've been spiking up pretty nicely. So about a 30 pip hike on dollar yen, just as an example, to give you an idea of where we're at for these dollar-based assets. Pound dollar, roughly about a 30 pip drop as well, I do believe. So currently about a 30 pip push towards some of these main dollar pairs. I like to see that because it's pushing some of these dollar-based pairs closer to my zones to take the opposite side. So it just so happens dollar CAD is a prime example of that. So if we take a look over here at the top setups, we can see dollar CAD at the bottom, still giving us a nice, very bearish signal over here. Again, I think this is more just a little bit of temporary dollar strength because of some of those medium and light impact data sets that were strung together that were positive. But when we take a look at the overall surprise index over here, the dollar moved from 27% beat rate to 30% because of the GDP, I believe it was on the, let's see, was it the GDP number? Let me go double check here. One of those data sets was a bearish box the previous time, and it's going to a neutral box. So yeah, that was the GDP number that we just had come out. So there you go. Previous one missed expectations, gave us a bearish box on the US heat map. Today, that bearish turns to neutral. Thus, our 27% hike up to 30%. So still bearish overall, right? Take a look at the, if we take a look at the, let's go find it, the US economic heat map over here. Again, it was the GDP number that went from bearish to neutral. So there's your percentage change, tiny percent stronger, except still overall weak. While Canada is our strongest currency when it comes to the fundamentals. They've only had one blemish, and that's their retail sales number they had here last week. Other than that, everything else is looking quite nicely. So we go back to the surprise index. We see the Canada at the top, dollar down here. Okay. So that's really kind of the premise of why I personally am more interested in this pair than I am anything else, at least at this time. So flip on over to the chart and we'll see where we're at. So obviously we got a nice daily trend to the downside, lower lows, lower highs. EMAs are in line, alligator's mouth opening up to the downside. I love to see that from the daily. Flip over here to my 4-hour chart within the daily supply. Okay. Within the daily supply, remember, I've got a couple 4-hour supply zones as well. One there. That's a zone on top of a zone. That's its own confluence point. EMAs are in line as well over here on this time frame. Talking about the 50 EMA, which is the light blue, and the dark blue, which is our 200 EMA. But then when I go down to my execution time frame, my fine-tuned time frame, everything rings true over here as well. So it's still, the 50 is below the 200. We have pierced the 200. We bounced into the daily supply yesterday, and believe me, I was this close to considering a short up here, but I needed to wait for my rules. My rules say 2 time frames, 2 sets of eyeballs on the same zone, the same general zone. So that's why I wanted to wait for the 4-hour supply to get touched. Well, now we've touched. So what do we do from here? Do I just hit the short button? Could. Might be a little aggressive. But instead, what I decided to do, guys, was kind of fine tune it. So what I ended up doing on this, just so you guys are aware of where I stand, on this most recent 1-hour candle that just closed 22 minutes ago. Now, not to get too deep into the woods, not to get too advanced on you, but what I ended up doing was flipping this thing over to a volume footprint chart so that I can see the individual market orders that took place within these candles. So if you take a look over to the left, on average, we got an 8,000 market order candle here, 7,000, 5,000, 4,000. Talking about the total line here, 6,000, 9,000, which is when we had our US data dump earlier today. And then when we go up to this most recent candle, the one that closed, it gave us 14,000 volume on a smaller candle, on a less candle. So the candle was less than the previous candle, which is when we had our data dump, less range, but a heck of a lot more volume. So I kind of take this as a sign that, hey, we're really starting to get some volume starting to kick in on this thing. It was a bearish candle. We did have a little bit of a wick underneath, but we had a much larger wick above it. And for me, what I ended up doing was putting a sell stop order in if we break this candle. So that white line that you see going across there. And I'll just flip it back to a regular chart just so you guys can see what I'm doing. Now, this is keeping me safe right now. Okay. If it comes down and pierces, then I'm in this trade. I'm in this trade short from this candle, from the bottom of this candle, the break of this candle. Actually, a few pips below this candle, to be honest with you. But I don't know how much higher it wants to go, like it's currently doing. Right? It's currently chewed through the, looks like the rest of the 4-hour candle, the 4-hour zone. But remember, we still have the second one up here, which it's just now tapping into. So could this be the 4-hour zone that really wants to slingshot price down? I don't know. But in order to stay safe, rather than just putting a market short in this thing, I decided to do a sell stop. So it can come up here and do all it wants. As long as it stays within this zone and it doesn't pierce the zone too far up, then it can do whatever the hell it wants. As long as it comes out of that zone, that's when I get into this short. I love buy stop and sell stop orders. I love it because it gives me a chance to, well, first of all, to have patience so that I'm not just shorting or buying as soon as it hits the proximal line of my zones, but it gives it a chance to go deep into the zone to find more and more unfilled orders, to finally find a spot where the smart money really says, okay, we've had it. We're defending this territory. Now it's time to take price the opposite way. So yeah, got a sell stop order on all 3 of my counts. And when it comes to take profits on this thing, number one, I've got obviously a stop loss above. So roughly about, I believe about this area here. So that's going to be my take, or my stop loss rather, keep me safe. Now, as far as take profits, I drew these zones up this morning for another stream I was on, but I figured I'd show you guys as well, because you guys often hear, hey, whenever you get into a trade, take, as far as your take profit, just take it down to the next swing low or swing high. So you guys know me. You guys know I love to see what could possibly offer up a landmine to really screw me and take away my unrealized gains. So I drew up a couple zones, a few zones. This zone here has a gap. This is a demand zone. Okay, we had a big, strong push up to the upside. So this is landmine number 1. This is landmine number 2. Hey, this is a basing structure before a real gap to the upside. And then we obviously have a demand zone at the very bottom, which represents the origin of this overall strong move up. So there's 3 possible landmines that can take that can take away my unrealized gains, right? If I get in this short, if it taps me out from my sell stop, well, we could bounce into here. This could take away my unrealized gains. I don't think it will, though. I'm not so worried about this top one because where's my volume? What's my volume on this leg out? It's just a green bar. It's just an average bar. It's not a yellow bar. It's not an above average bar or an ultra high volume bar. I don't think I'm that worried about this one. So what I would expect is, if price does come down in my favor, I would expect some sort of bounce up, shake out some weak hands, but the overall trend is down, right? So I would expect that it would push through that zone, go down to the next zone. Well, what about this zone? We had a gap up. Gaps typically mean there's some strength on the preceding move before it, or preceding basing structure. Same thing. What's my volume on this gap up? That's a very puny green candle. So should I be that worried about that one? No. But same thing. I would expect to get some type of retracement up. Okay. Some type of retracement, but the prevailing trend is down. What about the zone at the bottom? Why not just take my profits at the swing low like everybody else does? Well, this is the origin of this strong push up. Now, this zone, at least not yet, it has not yet broken an overhead supply, hasn't broken an overhead structure. So what's my volume picture on it? Oh, I got a yellow bar. I got an above average volume bar on this leg out, which basically was the start of all this movement up. So I have to be aware of this one, guys. So as far as take profits, I put my take profit just ahead of that zone. So while most people are taking their profits at the bottom, I'm not going to fool around with the possibility that that demand zone could take away my unrealized gains. I put my take profit right there, just ahead of that zone. Because otherwise, I've seen it so many times, guys, price will come into this last zone and then turn around and take away all my unrealized gains, and even worse yet, give me a small loss. So that's the game I play when it comes to take profits. I don't think it gets talked about enough. Okay, well, we know where our stop loss should be. When the hell do I take a profit? I just thought I would share that with you guys to maybe just give you some thoughts or some opinions or some ideas on how to actually get out of this trade, because we don't hear about it near enough. Okay, just overall, I'm talking about overall any stuff you can find on YouTube. So anyway, I'm fine with whatever happens. If it blows through the top, great. I cancel my sell stop order. But if it rolls around and goes through, hey, I'm in this short, and I'm happy with it because it's matching up with the top setups on the Edge Finder. Guys, get you a copy if you don't have one, in line with the trend, and I'm in line with everything else that I talked about. One last thing, and then I'll get to you guys' tickers. The other thing I like about this setup is the fact that I drew up a contraction box over here. In fact, it probably will even show up on my master pattern. So let's turn that on for a second. 15. Yeah, exactly. So we have a basing structure back here. Well, supply demand, there's not really a big imbalance at the moment. It's equilibrium for that period of time. At some point, supply or demand wins. In this case, demand won. Pushes price up, tests liquidity. And at this point, what happens? This is where the manipulation game comes in, or the, what's the word? I don't know, whatever the terminology is. At some point, the smart money takes over and says, okay, let's go test liquidity on the other side. We push down through. Now we've tested this liquidity over here. Inducement. That was the word I was thinking of, guys. Inducement. Okay. Inducement takes over. Inducement up, inducement down. All I ask it to do at this point is to go up just one more time, find my overhead supply so I can take the other side of it. So this is where your actionable way of looking at Wyckoff takes over, because we're testing inducement, liquidity, making sure our volume looks great, and then we obviously go for the short at that point. But again, I don't know how much it's going to frolic around up here. It could frolic around all it wants. All I'm waiting for is for it to break. This, by definition, is the only time I ever take a quote-unquote breakout trade. But I'm doing it within the confines of my supply zone. Does that make sense? So it's not like I'm taking a short down here because it's breaking to the downside. So anyway, wanted to kind of break that down for you guys, since it was, I think, a really, really good example of something that just doesn't happen very often for me with the way I trade, with the time frames I trade. It's very difficult to find everything kind of line up. Now, just because it lines up doesn't mean it's a guaranteed trade. Doesn't mean it's a guaranteed win, right? But at this point, I've covered all my bases. So if I take a short on this thing, I would expect it to continue the trend down. If I take a loss, that's trading. So anyway, thought I would break that down for you guys. Let me know what you guys are looking at. Let's see here. Pound dollar. Pound dollar is definitely on my list. I think it's still at the top, isn't it? Euro dollar's at the top. We got pound dollar +7, euro dollar plus 10. Looks like Aussie dollar fell off on this latest update. So we're left with euro dollar, pound dollar, and then obviously dollar CAD and dollar Swiss. So yeah, let's take a look at those and see where we're at. Okay, pound dollar. So I'm looking to buy this, guys. And this is a similar setup. Now, remember, I told you guys I was waiting on it to return to Wednesday's price levels preceding. So the consolidation, the basing structures, the formation of these demand zones preceding the bond buyback headline. Well, there you go. This is a picture I like to see. Again, that positive US data on those low impact and medium impact data sets that came out, giving us a little bit of bullish strength right now on the dollar. So again, I love this. And this is where I told you guys it can get unnatural, because I'm expecting price to drop on pound dollar, which is a temporary, very small downtrend, right? But it's in context of the overall trend, which is up, just like dollar CAD is down. So, hey, going to stick with that 135.60 level. And all I need is just a continuation, just a drop. Just need a drop in here. Now, my perfect setup is for price to not only touch the 1 hour zone, but I'd like it to drop a little deeper to touch the daily, which is, of course, my yellow. Remember, 2 sets of eyeballs. So not the 1 hour, but I need it to go to the 1 hour and the daily for that possible long. Now, what I would like to see is a little bit of slowdown, and I'd like to see a little bit of basing just ahead of it. A little bit of contraction so that we can create an inducement point. So if we can figure out a way to get price to come down to this area, anywhere down this area, and just kind of base sideways. Well, now we're going to get a similar picture to what I just showed on dollar CAD. Sweep up, sweep down into the 1 hour and daily for that buy point. Inducement on either side. Okay. So that's what I'm looking at. Maybe a little lower. Maybe I'd like to have that a little deeper down. Yeah, just ahead of it. Just ahead of it. Something like that, guys. That's what I would like to see. Get that basing structure just ahead of demand. Start getting the liquidity sweeps on either side and manipulation, smart money, toying with the retail traders, and then get that final drop through, which is obviously a spring for those of you Wyckoff junkies out there. That's a spring. Get that spring candle down, which is my favorite ones to get, my favorite ones to attack. So that would be my point there, guys. I put the alert on the proximal line of the 1 hour, but again, the reality is I would rather wait for it to go pierce a little deeper and touch the daily. Am I sounding okay, guys? Damn stream still going strong. All out. Am I sounding all right? I've discovered when I talk to my other team on my other project I'm working on, we get on and do some Zoom calls, not Zoom calls, but Microsoft, whatever the hell it's called, the Microsoft video streaming. And I get on there and I talk to him for like 20 seconds before realizing I forgot to pick up my microphone and turn it on because it is a wireless mic that I have. And it's got the little wireless thing in the back, but I always put it down over here to my left and forget to turn it on in the morning. So just want to make sure it sounds good. Okay. How I define supply and demand zones, Matthew? Yeah. So a proper demand zone, a supply zone, and I think I have a photo of this. Let me see if I can find my. Let me think about this for a second. Let me just go look over here. I should have somewhere here. Oh yeah, I've got it right here actually. I've got a good visual for you. Let me just figure out which of these 3 or 4 folders it's in. And there we go. Is that right? Yeah, perfect. So let me pull this picture up for you. Photos, always. I'm gonna do this. I've got a picture and I'm gonna copy and paste it directly onto my chart here. How much price did price spend at the zone? This is the important piece. All right, watch this. Okay, so when price gives us a drop, at some point, if it turns into a zone, it'll start basing out like this. You'll start getting some candles side by side, and then you'll get a rally. So this is a drop base rally. This is a drop base rally demand zone. Now, there's also rally-based rally demand zones, which is a similar concept, but this is at the origin of a new strong move to the upside. So just picture that. The ebbs and the flows, the swing lows, swing highs, right? This would be considered a swing low demand zone. So you get a drop. If you're in an uptrend, you're inevitably, with the ebbs and the flows of the market's going to get some profit taking. You're going to get some traders that are trying to stop a rocket ship because we're in an uptrend and they think it's got to go down at this point. So those two sets of traders combined are going to start giving us a retracement. And then at some point, we get a basing structure followed by a leg out, which continues the trend. So my perfect demand zone is 1 to 3 of these basing candles. So right here, we see 2 candles. This is the best. This is the best setup. A good setup is 4 to 6 basing candles down here. So this example has 4. Now, if it's 6 candles, if it's over 6 candles, this is too many candles. So when you guys hear me blabber on at times about price spent way too much time, that's way too much time for the smart money to potentially accumulate or distribute their position, whether it's demand or supply, doesn't matter. This is what I'm referring to. We get a drop, we get a base, and we get a rally, yes, but it's way too much time. That's too much time for the smart money to sit there and cuss and discuss with their superiors, everybody that they're over, and say, okay, we got enough in. Did we get our full position in? Okay, great. We'll let price fly from here. Because the difference is over here, that's not a whole lot of time for price in that area. So when price descends and we're in an uptrend, whether they're trying to defend their orders that they put in down here or they're starting a new set of orders, the point is this is maybe enough time for them to put in a partial position and then price moves away too fast to where they can't continue accumulating, in this example, their position. So if and when price returns, they're probably going to want to continue their accumulation process or just finish the last bit of order that they tried to put in the first time before price ran away. Whereas over here, they had plenty of time. So ideally, 1 to 3 basing candles minimum. I will trade 5 and 6 candles like this example shows, but I just don't like to do it. If I do it, if I trade at one of these zones, I'm cutting down my risk a little bit. So this would be a full risk, this would be a partial risk, and this is likely where I'll just skip it altogether. But the key thing to remember is drop, and then our base, and then our rally, or rally, base, rally. Okay, and everything is flipped for supply zones if you just flip it upside down. So hope that helps on demand zones. What time scale would you normally use? I use daily. So yeah, good question. And this is just me, guys. Everybody has our own set of time frames. I like to follow the banks. I want to follow what the banks are doing. I don't want to do anything where the retail traders are trading. So for me, it starts on a daily. I want to see a daily basing structure like I have here. So this is our leg in. So this is basically a rally, base, rally. Okay. We rallied up. We based for a couple candles. I personally wrap my rectangle around the last down candle before the big, strong rally up. So it starts from the daily, and then also I need 2 sets of eyeballs. So that's where I'll go to my 4-hour chart. So for me, it's daily 4-hour. That's the quick answer. But in this example on pound dollar that we were just looking at, I've got a base here. And on a 1-hour chart, if I go down to a 1-hour time frame, I've got a base here. So this is my 4-hour, but it's also a 1-hour. I'll trade a daily and a 1-hour confluence, but I prefer daily 4-hour because that's just, again, the higher time frames. That's typically where the smarter money is camped out, waiting to eat from the retail traders. Okay, so that's my thought. But everything I just showed you can go down to any smaller time frames. If you want to utilize a 5-minute chart for your actual, chart to trade from, your decision time frame, well, then you'd probably want to go up to like a 30-minute for your intermediate time frame. And then maybe a 1-hour, a 2-hour, or a 4-hour for your higher time frame. Everything translates downwards, but the lower you go, the noisier it gets, the more retail traders you're trading with that really don't know a thing about zones. They're just busy trading breakouts and reverse fair value gaps. Okay, so stick with the higher time frames. It is longer in between trades. It can be a little bit more boring, but again, we're not here for excitement. We're here to make money. So if I can trade once or twice, 1, 2, 3 times a month, profit on even one of those with the small losses and the bigger rewards, you're going to make money, right? Or you can waste your brain cells and get gray hair early and scalp the markets, go to a 5-minute intraday session or 15, and accumulate a lot more losses. You'll have a lot more winners, but it'll eventually eat you up because you're trading against retail traders that don't really understand how liquidity works. Okay. And it's not their fault. They just don't know what they don't know. But that's why you guys are here, so we can teach you. So anyway, yeah, that's zones for you. I got 3 minutes left. Holy cow. Yeah, exactly, Matthew. Lower you go, the noisier it gets. All right. So let's see. Let me. Yeah. Okay. So yeah, that's pound dollar, guys. Euro dollar, it's going to be a very similar thing. Here's the thing. Most of these dollar pairs are very similar. Dollar Swiss was the only other one that's on the bearish list at the moment, and it's still quite a ways away from supply, guys. Still a ways away. Now, one last thing I wanted to show you guys when it comes to the dollar CAD position is, what about the yields? What about the Dixie, the KEXI, right? Talking about the indices over here. Okay. For the dollar-based assets, I like to look at the Dixie to see if I'm in a very similar type of a zone. Well, if I go to a daily over here on the Dixie, let's go to the Dixie for a second. This is the only one that's not really helping me out because I haven't recently bounced into overhead supply. Now, I am in a downtrend, so that's good enough for me. The KEXI, which is Canada's currency index, uptrend, Canada strength, retracement. What did it retrace right into? Get rid of that. Retrace right into a demand, right? Right into a support. This is currently where we're at. This is a good confluence for my dollar CAD short idea. Okay. What about the let's see. And then so that's KEXI. So what about Canada's currency? What about Canada's yields? Just the Canada 10-year yield, CA10Y. Again, I'm looking for strength. So I have the benefit of knowing that I recently bounced into a demand. We got a push up. And what happened from there? It broke through an overhead supply. This is another sign of strength, guys. This is two signs of strength. Recent demand zone bounce, recent supply zone chew through on a daily. Okay? I like that. That's a very good look. I could get even more anal on this and drop it to a 4-hour and see here that I've got a 4-hour demand, and that's currently where we're in, right? Just a couple thoughts I would throw out there. We can always look at the currency index for the two currencies we're trading. We can also look at the yields and see if they're bouncing into zones. What about the dollar? What about the US 10-year? Where's the dollar at? Here we go. Okay. Going back to our daily, we have a push up. We have our basing structure. I'm looking for dollar weakness. Well, we got close to, but we didn't quite touch the overhead daily supply. But what I like about this picture is we have a recent change of character. We broke this structure here, right? On this candle down, this ugly candle we had yesterday. Yields have been dropping lately. The 30-year, we got all the way up to 0708 levels last week. And we, as of when I measured yesterday, we got all the way down to 3.3% decline ever since that day, since Wednesday, I think it was. So where's our 30-year? I got it right here. Here we go. So I like this picture. A little bit of retracement right now, but the point is, I know I'm out of time, but the point is, guys, when it comes to FX trading, we can always utilize the currency index. We can always utilize the yields just to see if we're running into support and resistance over there as well. It's just an added confluence. It's one that I like to do, but I finally put this watch list together just so that I can make it easier to kind of go over things like this, ideas like this with you guys as well when we look at indices or when we look at FX pairs. Okay. So anyway, hope that helps. Dollar CAD it is. I'll let you guys know tomorrow if I get that sell stop order initiated or not, or if it continues going upwards from dollar strength. I'll just ixnay the trade idea because at the end of the day, I do believe there's another zone a little bit higher up that I might be interested in at that time. I think on dollar CAD. Yeah, well, it's a little further up. So anyway, we'll just go from there starting tomorrow. Ladies and gentlemen, have a wonderful day. I got to go pick up my phone. I haven't seen it in 12 days. It got stolen. Had to file a police report. They called me last night on my sister's phone and said they found it. So I'm going to get my phone. It's been nice to not hear dings and rings and texts come in. I gotta admit to you guys. But anyway, I can get back on the map. The world can continue to spin. Ladies and gentlemen, have a wonderful day. I'll talk to you tomorrow.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.